All right, good morning, everyone. Welcome to the Fivers live trading room this fine Tuesday morning. It's January the 6th, and the year is just getting started. And we do have some very interesting movements today in the markets that we are going to be covering today. First of all, hope you're all doing good. Let me know where you guys are from. Do a little check-in. I want to know where you are all tuning in from today. I know that we have a very global and diverse community here at the Fivers, and I would love to see where you are all tuning in from. Razdool, think that's how I'm going to pronounce that. What's up, man? Welcome. I know that you're a frequent viewer of the live streams. I do appreciate you coming in here and joining us for this morning session. We got Unbiased Trader, of course, as well. Miami 28. I don't know if you are a frequent viewer, but that doesn't matter. Good morning. And yes, we are definitely going to take a look at the gold. And as Remy just wrote here in the back end, don't forget to smash that like button as you do come in. Very important, actually. It's a small gesture from you, but it does mean the world to us. We got Ethan, who missed 2 trades yesterday and today. And I think I'm being a bit too careful, maybe. I don't think being too careful is not a problem unless you're losing money doing so. And I'm not saying missing out on profits, but if you lose money being too careful, then that's a bad thing. But missing out on profits, not necessarily a bad thing, because you're always going to be missing out on profits when trading. We got Louis. Good morning. Hope you're doing good. Good morning from Romania. We got Dover, UK. What's up, guys? We got India. Got a lot of people coming in from India as well. Happy to have you all in here. And that's right, if you haven't subscribed already, make sure that you do subscribe and hit that like. All right, so we're going to have LJ coming in shortly as well. He's just having some technical difficulties, and he will be with us in a short moment. What are we going to start with? What do we start with today? Let me know, guys, what you guys want me to take a look at. Give me a trading pair, and I will take a look at it for you guys. Let me know in the comments, and I will take a look. I know there's a slight delay here between me and the chat, about 10 minutes or so. No, 10 seconds. 10 minutes would be weird, wouldn't it? We got Nigeria here as well. Scott, good morning, Scott. Hope you're doing good. And then, of course, we got Unbiased Trader asking for DAX. Okay, so let's start with DAX then. What do you guys? What are we thinking on DAX? We're going to be looking at DAX, and then we're going to be heading over to gold after. Keep them coming. Keep them chart requests coming. Any questions? Take this opportunity to ask the questions that you do want to ask for two professional traders. We do this every day. I mean, all day. I wake up, I trade, I go to bed, I dream about trading, I wake up, I trade. It's just on repeat. So if you want to ask me any questions on trading, or you need some help with your trading, that is this is the right place to do so. So we are going to look at DAX. Now, where do we have DAX? That's the German stock index. We got DE40 here. And then I have DE30 here as well, which is basically the same index. I'm not sure why I have the both of them. Doesn't matter. Let's take a look at the DAX, which is the German 40, German 30. I can't remember the reason for going. I think they introduced more, basically, more stocks to the index years ago, but then so they created a new ticker, but then they kept the old one. Not sure why. Really good comments. Good comments here today. Well, we're definitely going to go through them all. So we're looking at, so is it at all-time highs? Wow, that's nice. That's an impressive move right there. So what I'm gonna make a note for myself here as well, because I want to look at the global stock index as well. So let me just open up a tab here in the browser and type in Bloomberg Global Stock Index. We're going to be looking at that later. I'm going to see what ticker that is so I can look at it in trading view as well. You know what? I'm going to give you some homework or an assignment. You can help me out here. While I cover DAX here, let me know, guys, how do I find what's the ticker in TradingView for a global stock index? Basically taking all the major stocks around the world, putting into one and seeing where we are. So check it out, give me the ticker and I will take a look at it. So looking at the weekly, we get a weekly breakout right here. Weekly candle is closing in 3 days. We're going to be putting a horizontal line here at the previous all-time high. We're also going to be putting a line on the previous, like the breakout level here, last week's high. Going into the daily, we do see a very clean, clear breakout here on the daily. If you're an ICT trader, you would look at this and say that we have a potential daily fair value gap, aka a breakout, and then the retest of that level would be a break and retest. This looks like a solid move to the upside, but we can, we can also look at what happened last time, or previous times when the DAX broke into new all-time highs. Because a lot of times people look at this and say, okay, we broke into new all-time highs. We're going to continue higher. I'm going to ride that trend. I'm going to buy the breakout into new all-time highs. Most of the time, I would say that that's probably a good idea, because a lot of times when you have a breakout into new all-time highs, it tends to continue for at least some time. But if we look at the previous time we had an all-time high on the DAX, and I believe this is true for most financial markets, with the exception of like gold, the recent move on gold or the recent rally on gold, and Bitcoin. Gold and Bitcoin, they tend to, when you have a breakout, they tend to kind of continue if there's a very strong momentum risk on scenario. But we can look at, even here where we had break into new all-time highs here. I believe that, yeah, that's a break into new all-time highs. Yeah. Even here, when you have that break into new all-time highs, you saw that price, and this is on the daily. So for a few days, price continued higher, but then eventually came down and retested that breakout level, and that actually happens quite often. So breakout traders here on the lower time frames would probably have a nice breakout trade here, but that is a swing trade. You're waiting for that retest on the breakout area. So given the fact that we do a lot of times see the breakout and the retest of the previous all-time high levels, I think it would make sense to look at DAX here from that perspective as well, adding a horizontal level, a wide horizontal level, starting with that. When you add horizontal levels to the chart, it's good to start having a wide zone and then narrowing it down based on more local price action. So if we can narrow this down a little bit like this, perhaps, or like this, I think I would be happy with that. Actually, I would like to have that one here. This is a good level for potential retest. So that's on the daily. We go down into the 4-hour. I still view this as, this is the trend that I'm watching. I'm going to be increasing size of that line. So this is the move, or the this is the structure of this move that I'm seeing here in the 4 hours. So you can see that you get a move to the upside, and then obviously price is going to fluctuate around an average price, right? And what's the average price of this one? There's a few, and what I'm talking about here is basically price fluctuating around a mean price. There's a few things we can do here to calculate where that mean price is. We can use moving averages. We can use very fast moving averages. Like, for example, we can copy this one I have here and go in, and we can use a let's take a look at a what if we add a five moving average, we're gonna see this. And you can see what I want to see is I want to have a moving average where it goes through kind of like the middle of price action here. A common moving average is the 9. I think in this case maybe a 9 would be good because you see that you're in an uptrend right here, but price comes back into that mean price, if you will, based on the 9 last candles. And you see here that we are significantly above the 9 EMA right here as compared to, I mean, we're still above the 9 EMA right here, but we're hovering close to it. And as soon as you have a deviation, like a specific deviation above this EMA, what we're talking about here is could be something like a band. Imagine if you have this is the 9 EMA, and then you can imagine you have a upper band, an EMA here, and then a lower band. You don't really have to use a band indicator to understand the principles of this. You can just have a moving average here, and then you're basically looking at the historic deviation away from this moving average. We can see, for example, here you get the high here, and then moving average down here, and then when you have that deviation away from that moving average, you tend to get a pullback. Same thing here, EMA here, high of price here, pullback. And now what we're seeing here is for a quite some time on this breakout, we had the EMA here and the high here. And if we use a simple tool like just measuring the distance from that high down to the EMA, we see that this is a 0.68 move or a actually, let's do it reversed here. So from the EMA here up to the high, that is a 160. Let's call it 165 pip move ish, and then from that high, that's a 180. And now from the EMA, let's take it from here. It's 140. So we could say, on this current move right here, when the DAX do hit a deviation away from this moving average, which I would say could be somewhere between 150 to 200 pips above, you tend to get a pullback. And this is the whole idea of a mean reversion type of strategy. Now, let's take a look at what happens if we add a Keltner channel. Now, the Keltner channel is based on, I believe it's ATR. I believe it's calculating the deviation based on so the bands. So the Bollinger Bands, that's just based on moving averages, right? Just deviation, standard deviation away from moving average. But the Keltner channel, I believe, also takes into consideration the ATR, as you can see right here. So if we remove that one, that's a nine moving average, the 9 exponential moving average right here, the white line. And then if we add the Keltner channel here, you see that the middle line of the Keltner channel will get replaced, or this EMA will get replaced with the middle channel of the Keltner channel because I have the same EMA. And then remember what I showed you here of uh, from that high down to the moving averages. Now, if that holds true, then the Keltner channel, we should see these tops hitting the upper boundaries of the Keltner channel if we use the same EMA. So if we add this here, that's almost exactly what we're getting right here. So this is a price deviating away from that moving average, the middle line, and then based on the ATR, which is the average true range, it's calculating uh, the average range that the candles have moved. So basically, it's a measure of volatility. How volatile has price been for a certain look back period? And in this case, it's using the 20, I believe. No, it's using the 10. So here's you look back 10 candles, and then it looks at the volatility, the average price movements of those 10 candles, and that's what the upper and lower bands are based on. So right now we're hitting the upper boundaries of that Keltner channel, and we could perhaps expect some type of pullback down to the mean price. And if we there's another way of measuring the average price as well, and that's using a linear regression indicator right here. So basically what it does is it looks for a best fit line through this trend, and then it adds two standard deviation to the upside and the downside. And you can see that interestingly enough, I picked that exact perfect candle right here. And we have now price in this trend very nicely respecting the upper and lower boundaries of this linear regression channel right here. So we can use that. And then on top of this, just to demonstrate that you can look at you can look at the mean price and measure these types of mean reversion ideas using different indicators. And it's just a matter of choosing the ones that you prefer. So, and then of course, if you're using something like the Keltner channel, you got to make sure that the EMA that you're selecting is based on the actual trend or the market that you're analyzing. And we find that here, the 9 EMA fits very nicely with price. And here you can actually see that we have a type of correlation between the upper boundaries. And of course, when you're using Keltner channel here, and you're looking for a mean reversion play in an uptrend, that would usually be shorting this uptrend down to the mean price of the uptrend, or going long, of course, on the dips. But whenever the Keltner channel top aligns with the standard deviation channels, you usually have pretty good confidence. So you can see right here, and then in this region right here, and that's exactly what we're getting right now. And the thing with this channel is that if you're trading based on the mean price and a return back to the mean price, that would be the middle of that channel, where you also have the 9 EMA right here. So on the 4-hour, that's a rather bad risk to reward, right? But this is where adding the lower time frames comes in. I'm just going to change the visibility here of this level. And one good thing you can do in trading views, you can right click the level and then you can select current intervals and above, which means if I go lower than a 4-hour, it's not going to show. So we go into the 1-hour and then we remove the linear regression channel and the Keltner channel, because we now know that this level here is the level where we have the confluence between the Keltner channel and the linear regression channel. And interestingly enough, it also aligns very nicely with a untested breakout level here on the 1-hour. So here we can also add the fibs from that low. So that's the breakout move of that one. I believe we would actually, the fibs kind of doesn't make a lot of sense here because that's the move. I don't think it would be correct to add that one. It's interesting though that the 50% level aligns perfectly with that one. But the idea here would be to look at the lower time frames and trade this down here. So if you're a mean reversion type of trader, you're probably looking at this. And here we can add a fib from that high to that low. Price action is not very clean here. Seems to be a lot of noise. But it's still an interesting retest of that fib level. On the 15-minute, we're seeing a strong bearish candle, although there's a big wick to the downside. But if I would be trading this, I would probably be looking at this as a trade, and then TP would be that untested level on the 1-hour. That's to the short side. Now, if you're looking to go long on the DAX, then we look at this level right here as a potential buy the dip opportunity. We can go back to the 4-hour, and then we can add back the Kelton channel and the linear regression channel. And I would then look at this level as a very good confluence for a potential long. So if there's any confirmation on the lower time frames, I like that level. But if you add a fib here from that low of the move up to the high, you will see that you also have pretty good confidence to the downside as well. Between the 50% fib and the 618, the low of the Kelton channel comes in at the standard deviation, the standard deviation of the linear regression channel. So for me, as a swing trader, what I would be looking at is I would not short this, because obviously if I would short this as a swing trader, the risk to reward would be terrible. As an intraday trader, understanding the mean reversion nature of the market, shorting here might not be a terrible idea, although I think that the trade is already gone for that. And everything moves so quickly on the lower time frames. That's why I don't really like trading the lower time frames, because I'm just doing my analysis and then the trade is already gone. I mean, look at that retest right there. You can even, if we remove this, this is a beautiful retest on the 5 minute as well, because you came up and you hit that higher time frame fib, and then if you add a fib on this one, see that high of the 5 minute candle almost perfectly hit that 50% fib. So I think we're going to go down and hit that level below. But I'm not a low time frame trader, although I like to do some analysis sometimes on the lower time frames to kind of give you guys maybe some inspiration of what you're trading. But as a swing trader, I'm watching this level below. I'm going to put an alert on right above the 0.618, because I would love to be able to see a move down into this region and then higher. So that's the trade that I'm looking at. Let me know, guys, if you got an entry on this, because I think if you followed along with the analysis right here and you're having that trigger finger ready to enter a position, you probably get a good entry on that, the high of that wick. That's a beautiful beautiful entry right there. And if you're in something like this, then I would look at securing this trade once we break below these lows, or maybe even when we hit that lows. If you're the type of trader that likes to move your stop loss to entry early, then when you hit that support, you want to secure the trade, because the chance of having a bounce here is very high, because we just broke into new all-time highs. So you got to remember, you're shorting an uptrend, which means more risk, which means secure the trade earlier. Now, this is, of course, if you're a discretionary trader. If you're a systematic trader, you don't have to listen to me. Just do whatever your system tells you to do. Right. Okay. So that's all right. LJ, looking very white today. Welcome.
How you doing? Yeah, I've been trying to get the settings. I don't know. My camera's been a bit schizo. So, like the light over here, it's, I don't know. It's so sensitive to all the lighting. I can't get it to just behave, just act normal.
Yeah. Sometimes like it's
coming down from heaven.
Yeah, I get that sometimes a lot. Sometimes it's difficult to adjust to
I'm at the beach.
Oh, nice! Look at that. All right, how's your weekend and New Year been?
Good. It was busy as ever. Still, bunch going on, but I did get a couple of days off, which was nice. So, tried to, as much as I could, just disconnect from everything and just chill, do nothing for a bit, step away from markets. I did tap in, a couple times with a few headlines, but yeah, I tried not to sit on charts and all that. I saw silver absolutely exploded. Same with another run up in gold. So I did check out that. But aside from that, Pretty
Yeah.
cruisy, pretty cruisy.
Yep.
About yourself?
Yeah, all good, man. I've taken a long break. Not really been trading anything, which feels good. You know, taking a break from work and everything here over the holidays. I do feel recharge. But it's like you get into the work and you get into the the flow of things again, and then you're right back at it. So I'm not really sure if it's, but yeah, it was nice having some time to relax. But I do like being back to normal routines.
Likewise, likewise.
So we
Getting
got
back into it, I'm probably going to be touch on, touch off trading this week. I think I'm still going to take it pretty cruisy until we sort of get through this week, get a bit more direction.
Yeah.
I'm a bit indecisive on where we're going, right? Some of the end themes that we were talking about towards the end of last year, still confident on them, but some of the activity coming into end of year I found a bit peculiar, and a few conflicting bits and pieces. So I'm going to be taking it pretty light this week, mostly observing, I think.
Yeah, I think it's wise to do so, because I do have a feeling that the first few, and this, I don't have any statistics on this, but it would be logical to expect that the first few weeks of the year, people are trying to find a direction. They're trying to position themselves for 2026, and when you have a lot of people searching for that direction, it's probably going to be choppy. So probably waiting for price to. I mean, if there's an obvious setup, I'm probably going to take it. But the question is, are we going to get any obvious setups when I do feel like it's quite indecisive? But I mean, one thing I do think is, it's not for certain, but I do think gold is a good bet for this year. I mean, we've just seen U.S. go into Venezuela. They're talking about other countries, and they're threatening Greenland. I mean, obviously the U.S. is not going to attack Greenland. That would be insane. But the rhetoric is there. They're talking about it. They're talking about, like, hey, Denmark, we need Greenland, and Denmark's like, yeah, okay, but you're not getting it. Can't just take Greenland. But there's gonna be a deal. Like, they have a base on Greenland. They're gonna probably build more bases. They're probably gonna create some type of deal. But if they do invade Greenland, I mean, then basically,
Yeah,
yeah,
I
that's
think
I mean, that's not
that
gonna
would be
happen.
pretty wild. I think that's that you can see it's like a ratcheting up of this whole political tension, trade war type stuff. People talk about the oil thing, Venezuela. Yeah, that's part of it. It's the gold stores there, rare earth minerals, all that kind of story. And another big one as well is actually just like fertilizer inputs for farming and all sorts of things. Um, so what are the main two? Urea and something else. I forget what the other one is. But yeah, they've got huge amounts of that. So it seems to be this old. I don't know what the end game or the prep for this is. I don't know. Everyone's been talking about, there's been further escalations across the world geopolitically
Yeah.
for a while, and whether it's that kind of prep ahead of something more extreme, I guess. I don't know. Hopefully not, obviously, but
Well, I think everyone's feeling it. Everyone's feeling, something's gonna happen. It's most likely gonna involve AI. I mean, everyone knows that the country that has the best AI, the strongest AI, especially in defense or even in finance as well, is going to dominate whatever future world we're going to have, dominated by AI. It's a very scary future. I talked with Dirk about this yesterday, and I feel like I'm quite pessimistic about the future when it comes to AI and everything, as you know. But I do think that the world is preparing for something big. There's going to be a change, and the way the feeling that I have is that the main players right now, China, Russia, and the US, and it seems like those three main players, they don't really care about others at this stage. All they're really trying to do is like to gear up for something, you know. And it's interesting because I mean the US are making some big moves here, and they're gonna get something out of Greenland. I mean, we know that. I mean, Trump is not gonna be playing around here. He's gonna make a deal with Denmark, and end of the day, I mean, I saw that the Swedish Prime Minister came out yesterday and says like the only country that has anything to say about Greenland is Denmark. But then at the end of the day, they have nothing to say against the US. Not even in, like if the US wants Greenland, they're gonna get Greenland. That's just
Yeah,
how it is. Denmark has nothing to say against this. Um, and the European Union, like the EU, is just a non-player in this whole global world structure today. They have nothing to say against anyone in any matters at this stage. I mean, they they can't solve the crisis in Ukraine without the help of the US, right?
mm.
And the US like, we don't care, we want Greenland, you know?
Yeah, exactly, and that's I don't know. That's precisely what it seems to be. Like you're saying, they're sort of gearing up for each other, and I guess the US now coming to that conclusion that if the others are willing to, and they'll do that, then the US playing their, I don't know, we're the good guy, last line of defense type, world protector type thing, right? I guess they think they have to join the party and do that, and
Yep.
yeah, we've seen the whole, trying to get Europe to join the game as well, the whole defense spending pressure, that kind of thing, because they know they need these partnerships. And then stuff like Venezuela, that's where these other portions, like the farming type side of things, actually comes into it. Because if you do have some prolonged hot war, you've also got to be able to still support your people. Not have the people turn against you as well, right? So
Yeah.
yeah,
And Denmark is a NATO country, and America obviously also a NATO country. NATO would not exist without America. And the whole idea with NATO was, create a security agreement across different countries because of the threat of the Soviet Union back then. If and now the US is basically threatening to take land from a sovereign nation who is also a NATO ally. There's nothing in NATO that says that a NATO member cannot attack another member of NATO. Um, so because nobody really thought about that, so according to the rules of NATO, he can
which is
do
funny,
that and not,
right?
yeah, and not break any of the so-called rules or laws of NATO. It's only really a security guarantee that if a NATO member gets attacked by a non-NATO member, then the members of the alliance are um, it has to help with defending that country. But unless a NATO member attacks another country on the false grounds, then we don't have to help. But it's basically a defense agreement, right? But
Yeah,
if the US then starts, only the notion of threatening Denmark, I believe, has completely eroded the effectiveness of NATO. Because now it's like, okay, so being a part of NATO might protect you from other countries outside NATO, but it's not going to protect you against the US. It's like, so that's a
yeah,
very special situation that we are in right now. And like Dirk said, I believe he talked about this yesterday. If the US goes into Venezuela and they get part of Greenland, and maybe they're going to start threatening Cuba as well, then what's stopping China from going into Taiwan? Because Russia has already went into Ukraine. Russia said, we want Ukraine. They went into Ukraine. Trump
mm.
said, we want Greenland. They might go into Greenland. And then China's going to say, we want Taiwan. There's nothing like, there's nothing stopping China or Russia if the US goes into Greenland, and the EU is just stuck in the middle, saying like, "Hey guys, be nice, basically play nice." Uh, we got three bullies, and one, and the EU being that person that can't do anything about it. Um, it's a very interesting world order that is emerging here, and I think AI is probably going to be one of the leading causes of whatever's going to happen. I mean,
First thing that happens if they did try have a go at Taiwan, uh, Japan in the bin.
yeah,
They would get hurt more than anyone else. So if you're looking for a short, if that happens, short Japanese stocks and the yen.
yeah.
There you go. But
I've
yeah, I
looked
don't
at
know. We'll see where it all comes to. Who knows?
some disturbing numbers. If you look at the .com bubble, a lot of people are talking about the AI bubble, which, of course, it's going to be a type of bubble. I mean, I look at Bloomberg every day, and for the last 6 months, it's or maybe even 12 months, it's just been AI. But for the last 6 months, it's basically been uh, AI is the best. AI is going to change everything. AI will make everyone rich. AI will enhance productivity. Companies will make more money. Investors will make more. Everyone will make more money. And then there's this small note saying like, yeah, unemployment might become a problem, but it's not. It's not now. I mean, it's going to be very effective. And then maybe sometime in the future, there's going to be a potential problem with the employment numbers. And I'm like, yeah, well, maybe that sometime is 5 years. Very likely that in 5 years we're going to have a whole new world with AI. In 10 years, it's almost a guarantee at the pace at which technology is moving right now. And if I mean, look at the crash in 1921. I think that was the depression, I believe.
29, yeah.
Uh, think about how long it took to recover from that one. It took 25 years to recover. And then if you look
Yeah.
at the .com bubble, 16 years to have a meaningful recovery. 16 years. And then 2008, 6 years. I mean, yes, the bubbles and the recovery from the bubbles it's not taking as long, but the 2008 financial crisis was obviously a big one. But if AI is going to create a completely new industry and be like the second industrial revolution, then the crash from that might be quite severe, and we might be talking about recovery of multiple years, a very long time. Um, and of course,
Very
also we're
long.
seeing the geopoliticals are creating they're preparing for something here. So as an investor, it's an interesting scenario because what if you invest right now and then you save, basically, let's say you save a lot of money, like you're rich today, let's say you've saved a lot of money and you're rich today, the crash comes, inflation skyrockets, and the money that you have in your account is worth nothing compared to what it was when you started saving. So I think we need to think about, how do you invest in a way where you're diversified, in a way where you can actually come out of that depression and not be completely ruined, you know?
Yeah. So I mean, the biggest if AI actually delivers on what it hopes to, funnily enough, the biggest winners from it end up being a lot of the blue chip value stocks, right? Um, the AI companies themselves will have already been blown out. And it's kind of weird to look at it now. If that's the case, if they actually deliver, you're better off buying the other companies. And if they don't, then you're also better off buying the other companies because tech and everything's going to plummet. And the confidence I don't think that'll come back for a long time. You know, and just like you're saying, when you have those big devastating crashes, where in the past, like we had Apple, Amazon, Google, all of them, they've been down 95, 98% at one point, right? So yeah, it does get really weird. How do you diversify with that? That's where I think some of the risk is probably a little bit understated in as far as like ETFs. People just buying the broad index. Like if you do get that long trailing, like we don't really make gains. Hence, a lot of that stock picking nature has come back more in favor. So at least you can shuffle around, that kind of thing. Hedge funds have definitely picked up inflows for that reason. But yeah, I don't know. It's really tough. It's a weird world because I guess you just have to have the Fed, come out with the typical tools, pumping out liquidity, and hopefully that bids everything up. So most likely it would be some kind of bailout from Trump. I think they'd have to do that. So
Yeah.
yeah.
No, definitely. It's a very interesting scenario. I also read a post. I think maybe you guys have seen it on Twitter or on the internet, where there's someone asking, okay, so imagine we have AGI, and now there's 10 trillionaires owning basically everything because AI can now do everything. And the ones that own the AI can now do everything. And no one has jobs except 10 trillionaires who just run everything. And you live on basic income, like the basic universal income. That's an interesting world, interesting future. Okay, whatever. We have a few
Yeah,
years
it becomes weird.
until
Yeah.
it becomes very
I
weird when you start thinking about the actual implications of this, because it's not like we're not talking about the internet, right? We're not talking about the internet. The internet changed our world, but it didn't really change humanity, right? It didn't really change. I mean, society as we know it right now is definitely different from before the internet, but we're not fundamentally different as humans. You can go back to the, Roman Empire. We're still the same people. We still have the same problems, and you know, still the same type of capitalistic type of society, where in a free market you have supply and demand driving or motivating people. But in a future world where you don't have that, it's and it's on a global scale. We're looking at a society that we probably never seen before. Interesting.
Yeah, exactly. I mean, we already have a bunch of that. Like in most countries, most places around the world now, all your relative needs are kind of met, right, to a degree. Then it's just levels of, you know, small intervals of excess discretion, like I don't know, restaurants or foods or something like that. But all your sort of basic living stuff is accounted for, and then it's asset prices that are crushing people, rent, cars, these other kind of pieces. But so we're already kind of getting towards that, and then you've seen the presence of all the sort of betting type stuff, like Kalshi, Polymarket, that kind of stuff pop up because people just want to feel that sense of control, even though they feel like they're getting squashed. And where this all wraps into, like you're saying, it gets really hard to actually think about where this goes, is because bubble or something else. I don't think it's quite like a bubble when people think about an actual bubble being blown and then just pops, like when you blow out like that. I feel like it's going to be kind of like when you get like a water balloon or some kind of rubber thing and stick a hose in it, and it keeps going and keeps going, and you think like surely it's going to pop, but then it just keeps getting bigger and bigger, and then eventually pops. So I think it's going to be a bit more like that. So slightly different kind of bubble is elongated. And then how do you position for that? I think that's exactly the kind of why we've seen markets behave the way they have the past year. Gold smashing to all-time highs, commodities way up. Meanwhile, stocks also running through. weird labor market, weird data market. Currencies doing some odd things. Bonds are very directionless. We've got very different profile at the short end of the curve versus the long end of the curve, and no one can really get perfect placement on how to, price out that future, right? So this is also why I would wait sort of this next week and bit, as far as stuff like the dollar, because the confident trades I'm on for this year is definitely gold continuing its persistent sort of strength. I think Aussie dollar is going to be a good one, heading up towards 70 cents. But then as far as I think US dollar will still have that downside. As far as the Dixie, what it's made up, then we're going to have to talk about the euro, dollar, yen, and the pound, which I feel are a bit more unclear. Yeah, dollar yen should be clear, but it's not behaving that way, right? So, yeah.
Yeah. We've got a comment here. How old do you think I am? Let me know in the comments how old you think I am. That's a more interesting question. Okay, let's drop the AI dooms theories for a bit here, and let's take a look at gold here. I know a lot of people are asking for gold. Obviously, it's so unbiased trades is 55. All this is 21. It's a very wide range of numbers here. Very interesting. Can't Henry says 34. Yeah, I'm actually 35. But Ollie says 21. It's interesting. Okay,
21.
so
I'm surprised no one said like
gold.
6, 7.
Yeah, exactly. No one. My son wants to run screaming
Yeah.
6, 7 all days. Yeah. Man, a couple of weeks ago, I felt so old because I was we're having dinner, and both of the kids, they're laughing and talking about 6, 7. I'm like, I had no idea what that was, and I'm like, God damn, I have no idea what this is, and they're just completely playing with me here. Yeah,
It's literally like peak brain rot, honestly.
yeah.
I don't know how you go beyond that, really.
Yeah, it's insane. Okay, so gold. I'm looking to like, I want to buy gold. We talked about gold yesterday, and I said the retest that we had right here. I said that's probably a good buy on this. No, I believe it was maybe somewhere around here. No, I think I had we had a live stream, and then I came in and we talked about how this retest right here, that's a good solid retest right there. And I don't think the risk to reward is really great for entering here, but obviously it would have been in profit if I did enter here. But I want to see gold a little bit lower before I start entering a trade. Investment wise, I'm already long gold, and I keep buying gold. I think we're gonna see much higher prices on gold in maybe even this year, considering there's so many different things driving gold here. We got inflation, we got geopoliticals, and that's all. I like that. But from a trading perspective, I'm basically looking for gold to break this current trend that we have right here, and then come down and perhaps test this area, maybe fill the gap that we have here, and that's where I want to start building a position on gold. What are you looking at on gold?
Yeah, so I've got a similar opinion. I'll jump over. So I think it's still pretty well supported through here on the daily, right? But I do agree with you. Just this general, the downdraft that we had, and then obviously the Venezuela thing, has lifted us pretty heavily. So I would prefer some kind of move, even back to 4100, ideally, or 3950. Like if I was just looking at this chart just by itself, right? Um, assuming it wasn't on the daily, but obviously it being gold, this is on the daily. I don't think we're getting that. So I kind of feel like we could just run on from here.
Yeah, that's the issue, and
Yeah.
I'm obviously getting FOMO, and it's like, but the risk to reward, from a trade perspective, because we're going to put the stop loss. Obviously, you want to have the stop loss below where you think price might retest, and then it comes to what turns into a long hold, like a swing trade that you're going to be holding for quite some time, and then the issue with swaps and everything. So
Swaps thing, yeah.
yeah.
If I was looking at a swing, I'd be looking at somewhere about here, about 43.85 by the original all-time highs that we made earlier last year, back in October. Stops below the lows just through here, end of the year, final day of December. And then I'd be looking all the way up towards like 5K type area. So at least then you've got sort of a 100, and then give it some extra room, maybe 140 downside to 550, 700 plus on the upside. But then, yeah, like you said, it's gold, swing trade, heavy swaps. So I guess you'd have to buy it through like an ETF or something like that. That would be lower cost.
Yeah. For gold,
yeah,
I
would prefer that kind of move, like you were highlighting, down towards those highs again, and basically the tops from this like little range that we played in through there after the downdraft in December, coming into the new year, right? And I'd probably lean on that level. That same, I think that same pin bar that you mentioned before, we dipped to and then it rallied off. Just the fact that we already did that, I don't know if we'll get that much of a downtick, right? Because that's pretty much exactly where I'd be looking to buy from. So right on 4,400 pretty much, which is what we got yesterday. And
yep,
my best estimate was this runs higher. It's always hard when you're at all-time highs on an asset and it's got so much future forward momentum, looking at exactly where the nearest term moves are. So
yeah, I think I'm everything kind of screams long gold, but should have done so yesterday. I think it's definitely too late now. I think we have Unbiased Trader looking at the Bitcoin as well. Now, Bitcoin is interesting because let me switch over to Bitcoin quickly, and we can take a quick
Bitcoin's
look at
pretty healthy.
Yeah, it's actually quite interesting. We peaked above, or did we above 95? Well, we have the 95K area acting as resistance right here. Obviously, the obvious move here would be from 95 up to 100 as the next level. So on this chart, that would be from the 0.618 up to the 50%. Now, I think it's actually looking rather healthy. I think what we saw here is an unfortunate mix of potentially end of year selling. Not sure if that happens in November though. Maybe that's more a December thing, or maybe it's actually people positioning for November as well. But I think we had like an unfortunate mix of geopolitical tension. We had certain events here sparking a sell-off in risk assets, and Bitcoin, I think, had an over-exaggerated move to the downside. People became very bearish on this. I remember talking with Dirk, and Dirk said, well, we're in the bear market now. And I think, well, maybe, but looking at looking at price action, we are now forming a what looks like accumulation right here as well. And I actually wrote some notes on Bitcoin here earlier in the day as well, and there's this metric called the SOPR, which stands for Spent Output Profit Ratio, and that one is sitting at 1, which means it's neutral. And without going into details, the SOPR or SOPR is a metric, an on-chain metric that goes 1 is neutral, and then I believe above 1 is bearish or bullish, whatever. So it measures, it takes a look at certain coins. Let's say you take a look at one wallet, and then it measures when did that wallet buy those Bitcoins, and then looks at are they in profit or loss, or are they selling at a profit or loss based on where they bought it. And if we're looking at this right now, it's sitting at 1, which tells us that the coins are changing hands at roughly break even. Okay, so they're selling at around the same price as they bought, which means there's no panic selling at a loss. Okay, when you have a big move like this one and the spent output profit ratio is very low, meaning that people are selling at a massive loss, then that could be a sign of panic selling, right? But we never really had panic selling. We have around 72% of supply considered illiquid as well with this metric. So it's held by entities that do not usually spend their Bitcoin or sell their Bitcoin, and they're actually accumulating. So we're also seeing a lot of coins move to cores, because a lot of coins are moving off the exchanges. Okay, the more Bitcoin you have on exchanges, the easier it is to sell them, right? But when the coins move from exchanges to cold storage, it means that those people are confident in holding Bitcoin at these levels. So there's a lot of on-chain metrics pointing to accumulation, and also giving that global equities are bullish. I mean, the DAX breaking into new all-time highs, Dow Jones breaking into new all-time highs, and Bitcoin showing signs of accumulation. Why would Bitcoin break down? Like, there's not a good reason for Bitcoin to break down here from a fundamental point of view, because Bitcoin is two things. It's a risk-on asset, and it's also, at least from a philosophical point of view, a hedge against inflation. It's not a practical hedge against inflation right now, but it's what it's meant to be, in a sense. It's a hedge against the financial traditional markets, which it was created during or as an answer to the 2008 financial crisis, as an alternative to fiat currencies, which means that when fiat currencies are losing value, people should be looking at other currencies like gold and Bitcoin or commodities. So there's a lot of things here that tells me that there's a potential of this being accumulation phase, just like this was accumulation, that was accumulation, and now we have that one right here. And the break above 95K would kind of, in a sense, confirm that. And
Bank of America also recommended yesterday clients now make Bitcoin 4%
4%. That's huge.
Yeah.
From 1.
Yeah.
Wow.
Yeah. So that just happened this week. So that was their recommendation to clients. So interesting.
I didn't know
also,
that. I have to take him.
Yeah, have a look at that. There was also another really random stat that I saw someone posted on Twitter. From 2015, the long cycle for Bitcoin was 1,048 days or something. Then 364 days down. Then the next one was exactly 1,048. Then 364. Then again.
What's up, Pedro? You're live. Did you add yourself, or did Rem add you?
Good morning. Happy New Year, everyone.
Good morning, Pedro. Good morning. Sorry, LJ, you talked about the cycles, right? The halving cycle, isn't it?
Yeah, pretty much. But like crazy that it's like to the day, and then I think this recent one where we had was like 1 day over or whatever. But then that would imply the next portion is a year of further downside. So
yeah, so if I actually have a chart here with the like long-term analysis on Bitcoin and the halving cycle. So what we have here is 1, 2, 3, and the fourth cycle. And then if we measure the from the halving to the peak, we have the earliest top after halving is right here, and then the latest is right here, with the average being around here. But we are right in the middle of that area right now. So according to the cycle theory, price should be hitting a peak within this area, and that's not what we're seeing. Okay, so then people then started questioning the whole 4-year cycle for Bitcoin, but I think you can't just take it out of context. So we have to look at it from the context of what Bitcoin is right now. Now, Bitcoin was born through the financial crisis in 2008. It had absolute zero institutional adoption before 2017, 2018. And even back in 2017 and 18, there were only rumors about like Fidelity, for example, starting accumulating Bitcoin and things like that. And then fast forward to the pandemic, that's when people really started seriously talking about adding Bitcoin to their balance sheet of their companies and really adopting Bitcoin. And it was not until, I believe, 2024 where we had major spot Bitcoin ETFs. So that was not long ago. And now, if we look at the 4-year cycle from that perspective, we have a whole different context where it's actually last year, 2025, is the first year where we had negative returns past halving, where we should have had positive returns. And if we look at the returns, we have had 5,000% in 2013, and we have over 1,300% profit in 2017, 60% in 2021, and this time we got a negative of 6% past after the halving, which means that this whole regression line right here, coded by Dirk, by the way, is holding up quite nicely and holding up true, because now we have massive institutional adoption. We have Bank of America recommending customers to hold 4% of Bitcoin. That's insane. If I heard that back in 2017, I thought I would probably think that was a dream. I mean, because we talked about that happening sometime in the future, and in the same sense that we are talking about AI taking over sometime in the future. And a lot of people talk about it as being 10 to 15 years, but it took us it took us like 9 years for that to happen. So now we are finally, 10 years after the rumors, we are finally in the stage where we now have massive global adoption and institutional interest in Bitcoin. So the 4-year cycle, I don't think it's dead, but it's we're not going to see the same explosive growth. We're not going to see the same volatility. Bitcoin is becoming more of a mature asset class, which I think is more reactive to macro conditions and Fed policy and dollar strength and the overall risk appetite more. And it's going to be more correlated to the stock market. So yeah,
agreed.
Yeah, interesting.
I agree, and I'm still I'm leaning on the 5.5 year kind of cycle now, since like we've spoken about before with the debt rollover, the sort of refinancing, new refinancing duration that the US has taken on, because that's always lined up very nicely. People call it in question M2, all that kind of stuff, but I don't know, something's going on with it. So
Pedro, is this really your first session of the year?
Yesterday I started with Portuguese again, so I came back this Monday. So,
but that doesn't matter. I mean, this one. This
yes,
the only
it is.
live stream that matters.
It is indeed.
All right.
Yeah. Okay, thank you. Good to be back. Yeah, I've been off a little bit. I haven't relooked at the charts for almost 10 days, so it's good to be back.
It is good to be back.
It's-
Good to be back in the flow. Have you guys seen copper, by the way? Look at copper.
Oh.
It's broken the new all-time highs. So copper is you could definitely say it's a good sentiment of risk. Bull markets usually you'll have copper moving nicely because it's so close tied to different type of productions. In a bull market, people want to buy stuff and companies want to produce stuff, and a lot of the production, industrial production as well, uses copper. So it's a good sense of what the risk sentiment is. But you look at that one. That's what happened there. There was something with the. Can't remember what happened there. There was something massive with the. That was tariffs. Of course, Trump went down and said like it's gonna add like out of nowhere gonna add like 200% tariffs on copper or something like that.
Yeah.
So I think we can just ignore that one right there. And that was also when copper was at all-time highs. So that's interesting. We're now back into new all-time highs. So there's a lot of signs. It's a weird environment. It's a very weird environment because we're risk on in an environment where we're talking about geopolitical tensions that the world has not seen since probably the invasion of Iran. Or Iraq, not Iran, Iraq. I'm getting ahead of time here.
Yeah, it's very hard to get a succinct macro picture and kind of piece everything together. It's kind of like you have to trade each portion in its isolated pocket. Almost like how we were talking about the index, as far as the investing kind of thing, is like perhaps not the best idea, but individual like stock picking certain players is probably the way to go, and sort of just trade them on their own merit. And similarly with everything you're seeing here, it's the kind of the same way. So it goes the copper and iron ore stuff running off plus gold. That's part of the Aussie dollar thesis as well. Like I was saying, so that's one of the trades. I reckon 70 cents is probably next on the cards ultimately for Aussie dollar. We did get to 67, which was my end of year target there very nicely, and it's held up. It constantly is being bid up on any dips. So.
Oh, you're serious? You had 67 as your target.
I didn't even realize, but yeah,
you did this as well. Like, are you kidding? Is he kidding? I saw the look on Pedro's face as well.
That was completely.
All right, that's interesting, guys. I gotta make a move. I'll leave you guys to it. I'll be listening in the back end. I am looking at Euro GBP. I think Euro GBP is putting in a top here, potential swing top here. I'm looking for a short once we have a pullback on the daily to a little bit higher, and I'd like to short this because I think it's time to. Have we're looking at this is what I'm looking at long term, something like that, these two levels, and I think we had a massive move here and then straight down, and then we started that trend, and I just feel like it looks like price wants to fill something down here. So that's what I'm looking at a Euro GBP, but for now probably no trades, guys. I will be back later. Take care, and I'll see you.
Peace. See you soon, man. How we been?
Oh, good, man.
You had some time away, didn't you?
Yeah, I had family coming over, so I can basically just switch off completely from the market. I didn't look at it during Christmas time, the New Year's, and basically end of last week, I started to pay attention a little bit more, trying to start doing some analysis, trying to see what opportunities we can look at. So yeah, that's basically what I'm still doing. I haven't taken any trade yet this year. Yeah, we'll see. We'll see what will happen. You mentioned, I was just looking now at the Aussie dollar. You mentioned the 6-7 level.
Yeah, so that was
Right.
put all my lovely drawings back on, which I'm going to wipe them all after this. But so yeah, when we had this sort of downdraft through here, we had this kind of like
Uh-huh.
channel breakout through there. Had these the series of low highs, high lows. Lower highs, lower lows. But then ultimately got this pick up through here, and we came to test that portion, the sort of larger channel that you could run through there. And then, yeah, end of year expectation up here at 67. And once we had this dip coming into December, we're midway, I was like, oh, dude, I don't think we're going to get there anymore, right? But we did. We had that final burst, that final rally, and we did make it. So, yeah, I think from 67, the next stop is up towards that 70. If we go out on like much longer time frames, so part of that, like this is weekly here. We're now sitting pretty nicely above this 200 moving average, right? And on those longer time frames, the 50 and the 200, very important. Instead, we've been capped by it or tested it and failed a number of times. Now we're seeming to build a kind of structure, and then so back up towards these prior highs, about that 69, 70, and then ultimately up towards 71, 72. So that's my highest conviction trade so far for this year. Gold as well, higher, but as far as the levels, I've got to map that out still because, yeah, just like you, I actually took a bit of a break and didn't look at stuff for a while. So got to catch up.
Yeah, on the Aussie, I like I still like the idea that price can go a little bit higher. I think we were both in agreement end of last year or whatever when we were looking for those levels higher that price could go at 6.7, 6.8, something like that. And I think price could go a little bit, reach maybe 0.68 until maybe targeting those highs that you just mentioned, maybe around that level. And I'm actually going to be curious to eventually look for some potential shorts at around that level. Now one question would be if we are going to have more of another ranging year, or if ours is going to actually explode and even go and take this high and start trading above 0.7, because otherwise, if you are going to by any chance have kind of more of a ranging movement and you're going to go back, for example, basically to 0.65 or something like that, then that's going to be potentially a huge opportunity, and then you can even visit this level. Is quite interesting for me as well. But maybe are going to just have maybe some kind of reaction from around this level. This is basically the level I'm going to try to short it from, but maybe the target's going to be just come back into this level and then price will just continue. And again, question mark is what's going to happen close to this zone. Are you going to break it or hold it down? So yeah, that definitely is going to be because of some macro events, commodities, whatever it may be, China.
Yeah,
I don't know.
I think it'll be commodities. So long as commodities hold up and continue their sort of run of strength, then we've got a good shot at punching through that 69. It's just under 70. What is it? 69 something. Punching through there. If they start to stall out and we level off, and say stocks start to level off as well, there's a few more concerns, then I think we get that consolidation. I think we need some kind of adverse event like market crash to come right down to those lows again, because that peak around that 69 level up there is basically just before Trump was going to come in, right, with the elections. And then the confidence with that, and then knowing obviously that means more tariffs for China, so therefore Australian dollar in the bin and came off pretty heavily from there. So I think everyone's come down around that, so we're probably due to come back to that level, and then you've got the commodity backdrop over there too. So I think we need
going to be interesting.
Further highs, more confidence, everyone being okay with the Fed, the forward perceived risks, plus commodities running on, and lack of new trade tariff talks or whatever to push that 69, 70 level to get to 72. But we'll see once we get there, because often, if we get the right conditions at the level, you get that technical break. So,
yeah. Personally, for now, I'm going to be looking for price maybe just to go slightly higher, and somewhere around here I'm going to be looking for just some retracements, and then we'll see. Targets is going to be always until the previous levels of resistance, which can become support. That's going to be always my target until eventually, if you do start breaking some key levels, then maybe there is a potential to, who knows, come back into this 0.65 or something like that. It's going to be more intraday, which we are in the daily time frame. So if you do find maybe on 1 hour time frame or something like that, some reversal pattern like this, then maybe there's a good opportunity to capitalize. And we start already tomorrow. I think we have CPI maybe tomorrow in Australia, something like that. I think we do have some kind of news later on at night tomorrow. And then you can even look at the other ones. Like if you look at Euro Aussie, so if the Aussie dollar eventually is going to continue to move to the upside, then Euro Aussie potentially can go a little bit lower, maybe getting close to this low or in here as well. Another factor is if you do start seeing some bearishness on the euro, which we are seeing now at this beginning of the year, especially on the euro index, we can definitely see that the euro is being weak, even comparing with the pound. So many of these euro pairs, euro Aussie, euro yens, euro dollar, and euro pound, for example, as well, they are going a little bit more lower comparing with the other ones. So if you do have a bit more weakness as well in here on the euro pairs, which maybe can come back into this range, and then euro Aussie also can drop as well, which maybe can lead a little bit more Aussie dollar to go a little bit more to the upside, so maybe twist until this level or even below that, getting into here can be a good opportunity. So whenever they align as well, maybe euro Aussie here and the Aussie dollar a little bit higher, maybe we can find that. And then another Aussie pair that can be interesting is going to be the Aussie yen, because maybe the yen pairs I think are going to continue to be a big mover this year. Maybe we're going to have finally some kind of reversal. And the Aussie yen also is approaching kind of this top in here. So again, it could continue to go a little bit more higher in alignment with Aussie dollar until we eventually get into a level where maybe we can find some resistance and start moving lower. But so far, as you can see, basic price is just respecting the previous structure, just going higher. Slowly, you can see now it's losing a little bit of momentum, but maybe this is just because of holiday season, I don't know. But it's kind of losing a little bit of momentum, you can see based on the candles. And maybe eventually we're going to have some kind of negative move, and you can even just trade into this level in here. Maybe this can be a good opportunity either to go long or to go short with the target somewhere around this level. Because looking at the yen index, for example, we did manage to take this low. We are stuck now within this range. Personally, I'll still like to see some kind of this liquidity being taken. Maybe price could even go and respect this level on time and maybe continue to move to the downside until eventually we turn. But you have definitely had a really weak yen, but that may be close to an end. We'll see. Again, the talks are still that the way the government of Japan wants to continue to hike the interest rates, so that eventually can have a shift on the yen. But combining the yen, maybe then the Aussie yen, and then some of the other Aussie pairs, I think that can be a good trading opportunity for this beginning of the year. Something I'm paying attention at least.
Yeah, the yen's hard. I hate the yen right now. I'm just sick of this trade, right? Like just do something already. Right?
Yeah, exactly.
It's been so painful.
The yen is completely stuck in here at this point, not really moving. I think we can take these subs one more time until we eventually find some kind of bearishness. Maybe even taking this one as well. Maybe going to 160s before or 159s, whatever, before a major or bigger move to the downside. But for now, it's definitely stuck. It's stuck in there.
I think it's just traded very technically, and then obviously once you get towards that 160, then you do start getting that, the Bank of Japan rhetoric coming out about intervention, that kind of stuff. So up until that level, that kind of high pressure area, it's looks like just take the chart for what it is, because I mean that's just where we're going for now. So go figure. At some point, this is going to be wild to watch it collapse. But
Yeah,
It doesn't seem
if you're trading intraday, maybe to find opportunities, like especially ranging at around this point. If you're looking more for a swing position of eventually catching the move to the downside, yeah, that requires more patience. Definitely is going to require more patience to catch that move. And maybe don't trade the dollar yen at this point. Maybe try to trade maybe euro yen or pound yen or something like that. It is moving a bit more clearly. And there you go. Like pound yen is just moving. Just broke new highs again. It's momentum. Maybe it doesn't stop in here. Maybe it goes all the way to 220s or something like that. Before finding a proper sell-off opportunity. But as you can see, at least it creates momentum. It's breaking structure, then it goes again, and it's a bit more clear. Euro yen as well, a little bit. Again, we have a little bit of weakness now on the euro pairs these last few days. That's why euro yen actually is moving a bit more to the downside, while pound yen is moving higher. But it also creates a bit more of momentum at around this level. Aussie yen, the same thing. So it's about being selective on the pairs that you want to trade based on what you want to do. If you are looking for ranging markets, maybe dollar yen can be the best one to trade. If you're looking for any kind of momentum setups, maybe the other ones are for the better. Yeah, good. Everyone, happy New Year! Glad to be back in here. I hope you guys had a lovely and amazing holiday season and New Year as well. So my wish for all of you is just literally to have a successful year in the markets, and not only, also is personally as well, expanding, get outside of your comfort zone, trying to stay focused and disciplined on whatever you are doing, and that's a way to approach the year basically. But yeah, guys, let us know also on the chart what you're looking for. I think someone mentioned pound dollar before.
Yeah, I was going to say.
Yeah, I don't remember where that comment is. There you go. Take it easy. Nice name. What about GU? What is your take, LJ? What do you think about pound?
GU. Let me have a look. I haven't looked at GU this year just yet. I had a look at Euro, dug through that yesterday. GU, I mean, we're still punching on. I guess we broke these highs. Euro pound was looking pretty weak. I think Jonatan was talking about that as well. Euro across the board on a number of the crosses, looks pretty poor. Same with Euro Aussie. I'm pretty sure you brought up before as well. So, look, I think pound overall, we've gotten out of the woods of the whole scaries with the budget stuff. I think everyone's gotten over that. Right now, it looks like further upside for the pound. I can't see any reason to short it from a macro perspective right now. So, unlike the dollar yen, which I can, I think similarly though, I would just play this very much technically. Right here, you can see, high, low, high, low, high, low, high, low, high, low, high highs all the way up, and we've just broken this high through here. So, I would say a bit more height in it, probably 36.50. I'd be looking at. I think from there, I'd start to consider some kind of shorts. Something through there, because we have had a bit of a drive through here, but I think we've got some more height. Another 100 points. We rallied pretty heavily yesterday, actually. Across the board, I think when I was on with Dirk just before that, I really need to clear all this stuff. I was talking about yesterday as far as sort of playing out the rest of this week and maybe a bit into next week before I start taking some like core positions, just because I want to see a bit more direction for the Dixie, because we had this move down yesterday for euro dollar, and I was like, I don't trust this. This seems very odd. Just seems a path of least resistance after we sort of momentum died off through here, and saw that as a buying area, and that ended up being pretty brilliant. Yesterday we just rallied straight on, so I expect a bit more of that across the board, even for the euro dollar. I still want to see us closer back towards that 118, 119, but it does seem to be flagging a little bit compared to stuff like the pound. And then seeing that in the other crosses as well, more minor crosses for the euro.
Yeah, we did have seen recently some divergence between the euro and the pound, which is it's quite interesting. Initially, maybe pound was moving up, euro is not so strong, and then vice versa. And now euro is weak and the pound is going a bit more to the upside. So we have seen a little bit of divergences, which may have been beneficial to trade euro pound during this period. Which could have been definitely a pair to pay attention to. If I look at the pound dollar, where is pound in here? I like where price is approaching. So since we created basically this bottom, and you start turning, and as you mentioned, higher highs, lower highs, and so on, and basically price was just in a clear uptrend with some retracements in here. Now, as you mentioned, and actually just draw this trend line because you actually saw on your chart from this top and this top in here, just to be aware of where maybe that potential zone is for the future. Because I do like now this structure at around this level 136, 136.5, like you mentioned, as price is approaching this level. So for me, everything in here was already kind of weak. I was not really expecting price to turn to the downside after breaking basically above this level. This for me is kind of a compression zone, which means that eventually I was expecting price to just fill all this space in here or this range. And now that we went above it, I think now we may start getting into an interesting level to potentially look for reversals. Now we do need still to see some kind of price action to confirm. I like that you said already twice to kind of just stick a little bit with what you see on the charts at this point before you kind of start taking too much into consideration of what's going on in the world. Usually it was funny that you said that twice. Usually, at least last year, I don't think you just said that sentence, but this year you already mentioned it twice just to focus a bit more on the charts and play with what you can see in here. But I don't like.
Last year was very heavily sort of macro geopolitically driven, that kind of stuff, and that was one of the majority drivers, right? So it looks like we're back to a bit more back and forth, watching the data, just regular trading.
Let's see. Like I even made a comment yesterday. Like last year was the tariffs year. Let's see if this year is not the invasion year. Kind of, we already started with Venezuela. If he's not going to go Greenland and wherever else he's planning to go. Let's see what kind of craziness is going to happen this year. But I don't like this level. I think this was a zone that was before a strong level of resistance. You basically had that fake out. This almost can be seen as a Quasimodo pattern in a really high time frame scale. So I do like it. Now it will be more of getting into these levels in here or zooming into this level to see where are some fresh orders in there to try to look for. So far, still waiting. Still think that price can still go a little bit higher. Any kind of long opportunities can even be taken from around this level. Maybe if price just retraces back into this level, maybe you can find new buying pressure. But I'm really curious, and I'm actually glad that I actually saw you this trend line on your chart, because I think this around this level can be interesting to look for shorts. But I need more price action to show me
I think we get that
his intention to reverse.
Yeah, I think we get that dip, like you're saying as well. Sort of roughly 50% of that move up that we made yesterday, basically the top of that little box that you drew. That also comes in line with, I mean, you got the 200-hour moving average and that kind of stuff all starting to spool up in that area as well. So I think, a dip back towards 135 probably looks pretty nice. Unless we somehow hold this level here, which is right by the sort of highs into the end of December. But I feel like we're going to drop right through this. Looking at euro, dollar, Dixie, dollar yen as well, the correlations look like we're going to drop through. So
we'll see. Just finalizing here on the pound dollar, because we did on the bigger picture, we did kind of manage to at least break some key level. We basically broke this double bottom. So if you want to even take a look into it in the bigger picture, this could eventually be a potential continuation to the downside. Then the question will be more of if this level is here where this top was created, if it looks like already a good top or not when you're looking into the higher time frame, or if price by any chance does want to go a little bit higher before potentially making a bigger move to the downside. But because we did actually manage at least to break some key levels in here, I do like the idea of potentially looking for some shorts somewhere around this level, but so far I'm not. Yeah, go
I
ahead.
agree. Yeah. No, I was just going to say this comes to exactly what I was saying before about the being uncertain with the Dixie. So dollar yen, pound dollar, euro dollar. When I zoom out, look at some of these structures, there's still very much that backdraft of dollar selling again this year. But you look at the market structure and it's looking like kind of the opposite. Like we're just going to full reverse. And then that gets really weird with obviously dollar yen. Like, do we somehow it ends up becoming a freight train and they can't intervene and it sort of punches through 160, went out 165, 170, somehow find ourselves at 180 or something, right? I don't know. That's why I want to wait for this sort of this week. Some of the Fed direction, Trump's Fed picks, how the rest of the committee decides to handle themselves, and then see if that gives some kind of impetus. Some very split opinions right now, but those are potentially some major trades coming into like Q1, Q2 if we do flip around. So you can clean up majority of your yearly profits on some of these. So
yeah, again, last year basically the bottoms or the tops were created within the first the first 2 weeks of the year. That's when we bottom or topped. If you look at euro dollar, for example, this bottoming here. Where was it? There you go. Like it was on the 10 to 14. Yeah, the 10th of January all the way until then the 4th we had the double bottom and you start moving to the upside. Same thing on the pound in here, 13th of January, and then we just skyrocket. Sometimes you do have some trends that start straight away from January all the way till almost the end of the year. It's going to be interesting. Again, I like the levels. Just the same thing with the Aussie dollar, the pound dollar. They are still a little bit higher than their prices right now, and I still just need a little bit more of confirmation. This year, I'm going to try to play a bit more into a swing trading approach, even more than last year. That's going to be my goal this year, to try to write some of the moves. I want to start spending a little bit less time in front of the charts to stack into lower time frame stuff. So that's one of my goals this year. With the growth of the Portuguese community and some other stuff that's going on as well, I want to be a bit more organized within my own life and take trading also into that direction. So I have time to do everything I want. Otherwise, I can get lost just staring at the charts without being really productive. All right. By the way, guys, if you want to share on the chat, I think I did ask this question yesterday on the Portuguese live stream. One thing that you guys would like to improve this year in your trading, and one thing that you guys would like to remove from your trading, or a habit that you have that it's not helping you to succeed. So one good thing that you would like to add or improve in your trading or in your life to actually achieve success in 2026, and one thing that you'd like to remove from your life, from whatever, that can help you also to go into the right direction that you'd like to. So you write down on the chats as well. Maybe LJ, I can ask you that question. I don't know if you already have one thing in mind that you'd like to get better or remove as well.
I think there's some obvious ones from last year. So I think obviously sleep and check is a good one.
Okay.
Have less outside distractions, things sort of pulling me too thin. So one, I can then spend more quality time on the charts, and then funnily enough, just kind of like you were saying as well, also spend less time on the charts with more swing trading, that kind of stuff.
Mm-hmm.
So just a little bit less scrappiness, a bit more refinement, because I had pockets of that back and forth last year rather than a sort of consistent track. The first 2 months, great. After that, messy. So I think for me, it's just bit of organization with that. So yeah,
that's good. Any specifics on how you are planning to do that? Like, what are you going to implement to to be able to do that?
Probably, I guess, set down some more structured time for things, and also say no to more things rather than saying yes all the time to everything. Put down some of those lanes, some of those boundaries, and then try and shuffle off some old bits and pieces that have sort of been dragging along or not really worth the time or input or that kind of thing right now. And then just get that core process refined down to like just a repeat pattern that you do every day. And then just pedal on.
Yeah, that's good. That's good. For me, one of the main things. For me, one of the main things is planning. So it goes a little bit close to what you said in terms of organization. For me, it's more focus on planning, even for trading as well. Because last year it's something that I noticed is that I ended up missing several trades because I was not kind of aware of maybe the opportunity because of lack of planning beforehand. So I was kind of noticing the opportunity already after it happened, or kind of in the wrong timing. And definitely I noticed that I was not being so disciplined in my own pre-market analysis, let's call it like that, the evening before. Again, last year I started with the live stream of the Portuguese channel in the evening, so then kind of in depth, kind of almost 7 p.m. for me. Then I'm a bit tired, and then kind of that derived a little bit. And I was working out also even after that. So I'm going to change slightly my own schedule, and I want to add planning to help me to actually be more organized on that aspect. So that's number one. And then in terms of removing is also kind of try to remove some of this clutter, some of these distractions, a little bit of social media as well. I usually I never went to Instagram, but because now I was just kind of start posting stuff with actually the Portuguese community, and I end up kind of losing some time on scrolling on reels and whatever that there was not helpful at all. So kind of try to declutter a little bit also that social media to focus more on myself, because one of the things for my series is that it was a lot of output from myself and not so much input. So I kind of spend a lot of energy out, but not really kind of recharging as I would like to. And at the end of the day, after a few weeks, I started getting really tired. And my focus was all over the place. I was not focused at all. So yeah, that's one thing that I want to improve.
Very, very, very much the same. A bit aligned there. Sure.
Yeah. Let me know, guys, in the chat if you do have any things. Share with us. There you go. And buy strategy just shared.
We did have
yeah. Go ahead.
Elvin asked this a while ago, but So as far as future of gold price, look at the moment definitely looks higher. We've still got a lot of upside momentum. Pushing beyond these levels does get interesting as far as a question of, I guess, total market cap of the asset as far as a percentage of all total capital floating around out there in the world. So that gets interesting, but there's no other real quality defensive asset out there when you look to defend against some kind of adverse crash, whether it's caused by geopolitics, Trump, some kind of disagreement there, a banking crisis, or if it's just simply AI folding, one of the companies folds and pulls everyone else down, or they just don't end up delivering on what they're sort of hoping to, right? Because then the bonds picture gets really weird with the short end and the long end of the yield curve. Stocks are going to get drawn down across the whole. China's going to struggle. Europe struggles. The rest of global markets struggle. So what else is there? It's pretty much gold is like the universal protector there. As far as de-dollarization, I mean, it's been slightly increasing recently. Like you've had BRICS and everything over last year, but it's also one of those things that pops up. I mean, since I don't know, mid 2000s and since GFC and before that, it never really happened. Right now, it's still 80%, whatever or more of all transactions are done in dollars. It's still the reserve asset. across the board outside of gold, that's what you're going to trust. They've also got all the banking infrastructure. It's particularly the legal side. So you've got legal recourse in the event of something that something happens. So you got to trust that your capital is going to be protected and you can actually get this money. So at the moment, yeah, dollars in short, without going on a hour-long thing about it, dollar's not going anywhere anytime soon. So yeah, but gold, it has all the right things going for it. Not much else to say about it. Like, there's no reason I want to be dumping gold right now. You know, whether I had physical stores, long-term stores, anything. So.
Yeah, I agree. And even when looking at the technicals, at this point, it still continues to look bullish. There's no reason whatsoever that you're already seeing proper bearish signs in here. There's no proper breaks. Last year we did end up having a little bit of retracements, a little bit of ranges, but eventually price ends up always creating new all-time highs and then creating a new momentum for a few weeks, and we may continue to do that. I think maybe we can see a little bit of manipulation at around this structure. This was definitely a strong bearish candle on the 29th of December, but again, whoever was involved on this setup on that day, but I think price can still manipulate a little bit more at around this level. Then, of course, there is always the round number of the 5,000 that can potentially be a target, even if it is a psychological target or not. And then again, for me personally, to be always try to get involved looking for longs on gold if price is a little bit cheaper, and not trying to buy gold at the top. That's just me. Some people may feel a bit more comfortable to try to buy gold as soon as price breaks kind of a resistance level, kind of a breakout setup. I prefer to buy cheap and try to then maybe get rid or try to sell when price is expensive or high. But at this point, gold, I think it can continue. The situation, again, just what Trump did to Venezuela, it can do maybe to some other regimes or some other stuff. So I think the uncertainty is going to continue. I think Trump, again, is in a hurry to implement his own ideas, the way he sees the world. Last year was super aggressive with tariffs. This year, let's see what he's going to try to do. But I don't think he's going to be just quiet in the White House. I think he's going to be quite active again. And that brings stability, and that can also continue to push gold to the upside on that sense. But then looking at the dollar as well, I don't think Trump by any chance wants to see dollar weak. So I think Trump is going to also do whatever it can also to keep dollar at least stronger, at least to continue to be the main currency and not lose its value overall. That's a little bit of that.
Yeah, not to be confused with so gold momentum up through the year, but don't be surprised if we see some of those 8% day down followed by another 5% day down, just like the drop we had here, where we had that 13% retrace, and was it on the 29th what we hit 83.50 or something on silver, 27th, and then collapsed all the way down to 70, right? Huge fall. So if we get some of those, I mean, that thing, dude, when we were ripping up there, that looked ridiculous. I was just like you, I was sort of off markets through there, but I saw some like tweet stuff come through, and I was like, oh, what's this? All right, let me check that out. And I was like, oh my God, how we punched 83 on silver? Because when I sort of tuned out from markets, we were down at 67. So
that's which one of those squeezes, right? This is a typical move of pure exhaustion, as long as price is just kind of skyrocketing, and then everyone would kind of dump it until eventually goes to a good level again, and now maybe price is going to be more. Since it's not the first time again, it's going to go above these 80s. Maybe it's going to now easily just continue to see that. Like we have seen so many times this type of price action behavior happening, not just in commodities, also in stocks. But for micro, what's the one with the Saver, the company with Bitcoin.
MicroStrategy.
That happened. MicroStrategy happened as
Now
well
it's just
last year or
strategy.
2 years ago. Yeah. So we see every now and then we see this kind of moves, and then it becomes the focus of the traders, even in Wall Street, and everyone else starts looking at this because it's just the amount of volume that goes into this kind of moves, and everyone try to capitalize on small moves, and all of a sudden everyone starts squeezing. It attracts the short sellers as well. Or the short side traders as well in this move. It becomes just trading, pure trading. This is nothing else at this point on this type of days. But the value, again, the momentum may continue to go higher overall in silver. Basically the goal to be to try to identify the silver of this year. Right, in 2026, which one of all these assets is going to kind of be the silver of the year? It's kind of going to skyrocket 100% in a single year, basically. That's
I don't think we're not going to get the same moves on gold like we did last year. So I wouldn't expect another $2,000 to the upside. I saw again some questions about sort of prediction for the end of the year. Year end, I don't know, because there's a lot we have to chop through there. Last year was a bit more not predictable, but you had a bit of a clearer path towards the end of the year because it's Trump going through his first 100 days, implementing that further. We've got the Fed going the direction they are. It's pretty clear with his game. And then obviously we had the setup with that initially with the stock market drop, and it's going to be back and forth with trade tariff talks. So that's pretty much the whole narrative. This year we've got slightly different setup, shuffles with the Fed, changes in a lot of the data. We've been missing data after the shutdown. We've got US midterms and that sort of thing coming up. So it's going to be a bit more back and forth. I think this year is going to be a bit more choppy with some of that. So gold, though, I would say we do get somewhere around 5,200 this year. I don't know if we'll quite get to 6K. I think that would be a stretch. Because the other thing, if we do have some kind of negative, larger negative event going on, whatever that comes from, either further trade stuff, Trump doing something wild, the Fed, whatever it is, right? There will probably be a good bit of selling in gold as well to cover losses from stocks and the rest else, because gold's ran very well. A lot of firms, a lot of funds have made a lot of money on there. In order to cover the losses on some of the big AI plays or any of the others, they'll have to sell some good assets as well. So hence you always see gold often come off when there is a capitulation, even though it's seen as like a defensive asset. There's sort of more to it. And then similarly with the blow off top with silver, I mean, silver was at like 26 or something the start of the year last year. So that final sort of 3-4 months we just went bonkers.
Yeah.
Ridiculous.
True. Yeah, that's true.
So at some point you're going to take some profit, right?
Yeah, it makes sense, definitely. We have in here Paul was mentioning that he took a trade on the NAS. He saw a bit of resistance, so I thought it was legit. So Paul, did you mention that you sell it then? That this was a selling position that you took? Because he mentioned that he saw some resistance. So I mean, presume that he may be thinking that price may go down. That's an interesting one. The indices are going to be an interesting one. Are we actually kind of positioning in a way to start gaining momentum for another rally, or not?
I don't know. I want to see a bit more downside from here first. I'm pretty dubious on consistent strength through here. There's a lot of the sort of Fed rate trajectory and stuff. I mean, that's going to be very heavy for indices overall. So right now, I think another dip is probably on the cards. There seems to be a lot of caution. There's a lot of rotation as well from funds. I mean, I even saw was it BlackRock? No, it was Vanguard. For their 2026 recommendation, the traditional 60-40 portfolio, right? 60% stocks, 40% bonds. it's kind of if you do any deep research, it's kind of a rubbish way to put a portfolio together. But it's this industry standard type thing that's prolonged. They're recommending switching 40% stocks and 60% bonds or defenses. Right, that's their 2026 play. So I don't know if you get some of this stuff coming through, those kind of flows maybe being a bit different, more that defensive play. Yeah, I think a downside drop to what's that level? You've got little circle there. Was that like 23,900? I think that'd be sort of the next target from there. I kind of feel like we'll roll over back down there and have another test. So
yeah, I like that on the
last year.
Yeah, go ahead.
Basically, I was just going to say this was the stuff I had drawn out last year. So yeah, I would be. I feel like any kind of moves higher right now would be a bit of a fake out, right? And then you get some trap longs before I move down. So
yeah, I like that idea as well. On the NASDAQ, actually, you can see by my charting here that I even have this orange here because you did manage to break slightly with some of this structure. And I'm really curious. I like the way price now is rejecting a little bit this level, and I'm really curious to how price may react or trade around these levels potentially to make that move down. It's just slightly different from the S&P. For example, the S&P actually respected the low, didn't break it, and so now we end up making new highs, but which eventually can still lead to more bearishness. So I'm still curious as well how the S&P eventually is going to be trading at around this level, because of course if the S&P is by any chance making that big move to downside, if NASDAQ is making that move, the S&P is going to follow somehow. Yeah. So I'm just going to be tracking it to see if actually there is that potential of a selling pressure on the indices. That's what I'm going to be looking for. I'm not going to be, again, I have more tendency to look for shorts by nature. So this kind of goes into what I want to look at. And even looking at the other ones, even the Dow that actually created new all-time highs, or even the DAX as well, that it continues to go and break new all-time highs as well. I'm still going to look for potential kind of fake outs of this move and potentially move to the downside. Again, I think the world is still kind of indecisive. It goes in alignment with what we had in the end of last year or in the last quarter or so, which there is a little bit of indecision as well with what you're going to have, even with the Fed. I mean, what kind of path is going to take in the next meeting and whatnot. So that's going to be my focus. And then there is the situation with AI, which AI has been one of the main factors to carry the bullish market overall. And is it going to continue or not? Is the market still going to continue to be excited and continue to push to the upside just because of those companies that are leading the AI run? So that's going to be if there's by any chance any kind of move to the downside on that, that's going to be a big sell-off on the US indices. So AI is still going to be a big factor. Yeah, guys. Just don't forget to subscribe to the channel and like the video as well, so that it's free and it helps a lot for us to get to our target of 100k. Okay, so this year is going to be wild for the Fivers. It's our 10th anniversary. It's going to be also most likely the year that we are going to get 100k. Hopefully the Portuguese channel also gets to 10k. We're at around 4,000 something. So yeah, it's going to be an interesting year. Many things behind the scenes that are being planned for you guys. So yeah, press the like button, subscribe to the channel, and do all that stuff. There was just one comment from them by Pedro that he actually
16 more likes.
Yes, it's something that he had replied before. So yeah, and by Trader is mentioning, my aim is to buy my son a business class holiday for his 10th birthday. And there you go, another 10th birthday. But this is 2 years from now, okay? From earnings. That's a good goal. That's definitely a good a good goal to have. It's actually something that we could try to do is when you're trying to establish these goals that you want to achieve with trading or the money that you have, to already allocate with something that is emotional, strongly attached to us. And family definitely is one of those scenarios. I think it's much easier for us to then pursue that goal if you have that emotional attachment to the thing that you want to achieve instead of just money and the monetary value.
It drives you to the difficult, periods to actually persist and keep going, right? It helps give that backdraft. But the 10th birthday in business class, that's pretty wild. That's awesome.
Yeah, that's really good. All right. There's a comment here about oil from Harsh.
Oh yeah. So let me actually look at the oil chart, because overall oil, the forward blah, 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 can I speak? Forward outlook is definitely consistent, very healthy supply, basically, right? So that's going to continue to put downside pressure on oil. If we're looking at WTI, I think WTI, I've got Brent's up here. Okay, here's WTI. Okay. Potentially even more downside, to be honest. So the thing with WTI, I was talking about it yesterday as far as the Venezuela thing. A portion of so with US oil, right, the refineries were built for very heavy crude oil, right, sour, heavy crude. And then since the advent of shale came through, that produced a lot more light, sweet crude. So what the refineries actually have to do is import some of that heavy crude from Canada, and then they make a mixed bunch with the sweet crude, and then that gets the refineries up to that further efficiency level, basically. So now that they have Venezuela, if they actually do this whole take over and run it type thing, they're going to have a huge amount of very heavy crude that they can bring in there and mix and basically ramp the production up to full capacity and close that gap. So previously what they've been doing is getting the Canadian heavy oil to close that gap. That was also something I was talking about yesterday about Canada potentially being one of the biggest losers out of the Venezuela thing, because they bought 124 billion worth of oil or energy related purchases 2024. So majority of that was that heavy oil. So they're going to get hit there. But overall, it would just mean more production of West Texas. So therefore, any of these rallies, I would say, don't have high confidence in them continuing. I wouldn't be surprised if we even get capped about this 58.80 and continue lower. So we may very well hit the 60, as people determine how much control over Venezuela there's actually going to be, or if this is more, rhetoric and it doesn't really play through. In that case, you would see a bit of that rally. But yeah, there you go. How are we doing, Rich?
I'm tired.
Yeah.
That's all I can say is I am tired. Started going to the gym yesterday, went again this morning, woke up this morning, body definitely experienced the gym. My muscles are sore. I have no energy. I had a banana. I feel better. I'm still tired.
It's good to be honest.
Yeah, I forgot how much it sucks starting going to the gym again. Just it sucks. I know I spout the whole BS about get comfortable being uncomfortable. This sucks, man. It sucks.
You're like, I take it all back. Don't do it, guys.
Being uncomfortable sucks. Don't get comfortable being uncomfortable. Fight against it with every ounce of your being. I'm going to adjust myself, and I'm going to whinge as I do that.
But that's actually a good point. I think it's important to have that expectation that actually you are going to feel the soreness, that you're going to feel a bit tired of low energy in some moments. I started playing paddle basically 1 month ago or something like that. and I'm playing Pada like 7 a.m. in the morning, like 6 or like whatever. I wake up super early just to go play. I'm super excited there. So at least the excitement to go play Pada, I'm very excited. But after that, I'm during the day, my energy is super low, and my body as well kind of reacts to it. Like it's a different type. I'm used to go to the gym, so I'm okay with that, but it's a different type of pain. And type of cardio, whatever. But I do feel you. My energy just during the day. When I finish to play, my energy is high. After a few hours, just zzz, and then kind of just days off completely.
Yeah, that's where I am right now. It's just it's the start. I know the first few weeks are gonna be uncomfortable. And the thing is like I'm not a spring chicken anymore. I'm not a young man anymore. I'm like my birthday's in a month, and then I'm turning 38. So I'm like very, very close to that 40 mark. Not that I'm complaining, but my recovery phase. I remembered my recovery phase a few years ago was like, yeah, go to the gym, like, rep out personal bests, go and do a jog, come home, I don't know, mow the lawn, great. Nope.
It's different. Yeah.
Energy levels are like, nah.
Not anymore.
Yeah,
Not anymore.
It's true.
Yeah.
It's true, but it's important. I think I think your 50 years version is going to kind of say thank you for this 38 years version that you're going to the gym. I think
I'm working for the 50-year-old now.
yeah. And stretching. I think I'm 36 as well. So one of the main reasons, or one of the main things that start feeling a bit more on your 30s is kind of you are a bit more tense. Like the recovery is not as quick as before, and then kind of if your muscles feel stuffed, like feel stick, not so much. So you need to stretch a lot. I think that's one of the main things as well that I'm trying to do a lot is stretching, because otherwise I cannot even bend. I cannot do anything.
Yeah. Would you have thought that this would be a conversation that you would have, like 20 years ago? Like,
no.
The importance of stretching, guys. It's
no.
often overlooked. It's just like stretching. What are you, 80?
Yeah, there's no stretching. To be working out, going like not even stretching, not even before, neither after. It will be just do what you have to do and then move on. No preparation, no nothing. There's no injuries. Just go.
Yeah, like LJ, stay awake until 4 o'clock in the morning your time, and then you just soldier on because you're a machine. And then you end up in hospital, and
I was waiting for that bit.
Yeah. I went for a park run on Saturday, and I honestly felt great doing the park run. And about 2 hours after the park run, I came and sat down on this couch behind me, and I got stuck. I got stuck on the couch for like a good 2 hours afterwards. I was just sitting there going, how do I get up? I need to do things. I can't. Anyway, done complaining. How's the market been for you two guys today?
Chilling. I'm still sort of scoping it all out after taking a bit of a gap, bit of a break over holiday period, whatever. And right now I'm a bit mixed opinions on a couple things. So I'm sort of waiting to see how we play out technically, and then get some of the data and forward direction with macro Fed, whatever stuff over the next period to sort of actually punch some heavier trades. Because right now I'm just finding a little bit directionless. So just playing it sort of technically, like how we had the big downdraft yesterday on euro dollar, only to then climb right back up. So,
I was about to take it all back again.
Yeah. So I think when I was on talking with Dirk just before we jumped off yesterday, we were talking about how pick up through here would be looking pretty good. So that's sort of just what I'm looking at the moment for myself.
I was looking at NAS, and man, NAS sucks at the moment. It just
I reckon we've got this downside. Pedro and I were talking about this before, and I did see this the other final comment on oil stuff. I'll finish up on that as well before I go.
Yeah. You can do that. It's fine.
But yeah, as far as NAS, so this is what okay, let's go back to 1 hour. That'll be better. This is sort of what I was looking for, kind of mid-December, right? And then we're now trailing below here, keeping capped nicely by these highs, and I feel like we will get that downdraft. So, but yeah, it does this chop between here does kind of suck, because I hate those ranges where it's like tight and then they sort of expand but pull all the way back and then drop and then pull all the way back, right? So I know what you mean from that.
Yeah, I've got it on the daily, and on the daily we just have this like ascending and descending triangle like at the same time. It's just like converging to the same point. Like you can see it nicely, top, bottom, lower, higher, lower, higher. It's converging. So there's probably that coming. I don't really see much of an upside for NAS. I mean, this is all-time highs all the way over here, but I was having a discussion with my brother earlier, and he's very much a tech guy. So, LJ, you've met my brother. And he's very much of the opinion that with the whole RAM chip issues that we have going into the consumer market, and on top of that, you have the problem that some of the companies that had consumer-facing portions of their businesses, they're closing that. So the consumer itself is basically getting screwed in regards to the RAM chip stuff, and that's all going basically just over to the AI data centers, and that's not a good look. That's really not a good look, and there's most probably going to be a little bit of a sell-off. How long, I don't know, for NVIDIA, as an example, maybe even Intel, maybe on AMD as well, we don't know. And all of those are part of NASDAQ, so we'll probably see NAS sell off a little bit purely on that stance, just on the idea that the sheer amount of let's screw the consumer kind of business rhetoric they've been running with at the moment. So I'm looking.
I think that makes it go higher though. As far as again, I think it makes us go higher though, because the reason they're dropping consumer is obviously because they're making money hand over fist with ridiculous margins from AI, right? I did have an interesting conversation the other day with someone about the RAM chip thing though. Because weirdly enough, the actual supply of chips right now is no different. It's still full, but it's this weird like forward-casting now, trying to jack them up, that the supply later will be, drained.
The supply today is unaffected. The supply in a year to 2 years' time is completely knocked. So,
but at the same time, the price has been jacked up way ahead of that, and normally you see it sort of, I guess, smoothed out over like a progression, whereas instead it's been like this, stair step type thing. Also find it interesting that I feel like surely it's, I mean, obviously, chip fabrication is not something you sort of just jump into. It's not like you start a business and just do that tomorrow, but surely there's some player that comes out and sort of just captures that market, right? I don't know.
The problem with that is like it's not just RAM. It's not just the chips for a computer. Your phone. All of the chips, the RAM chips in
Xbox,
here is also PlayStation, Xbox, all of those things are also going to get affected. And not only that, I think there's only two. My brother mentioned two companies that mentioned that, listen, they're not going to get rid of their consumer side. One of them being Samsung, but the majority of them have already turned around and said, hey, listen, we're just closing down our consumer side. So what's that going to do for the price of a telephone? What's going to do that? What's going to be the impact on a price of a personal computer, laptops, Xbox, and then the industries that follow that as well, the gaming industry, which NVIDIA, Intel, and MSI and all of these big companies also have massive input into. Those will also start to suffer because the price to participate, and why would I go and buy a new Xbox if it's going to be twice as expensive, And
Yeah,
it's purely,
that's a,
and it's only because
yeah,
of the ramp. Like there's no
yeah,
other
yeah,
reason why it would be more expensive apart from the RAM. So it's just weird times, right? So I think within the next year to 2 years, we're going to really see the impact of that price hike.
yeah. I think it's
Really
whether
see.
it puts pressure on consumer because, like, I mean, Apple talked about this, I think, in one of the previous, I don't know, earnings call or shareholder whatever things, AGMs. But yeah, they were talking about sort of RAM and that kind of thing, and that the next line of iPhones will probably be another $200 or something more just because of that. Same with PlayStation, Xbox. I think they've delayed the next line coming out in terms of duration, and then also upping the price as well. As far as the, like stocks themselves, though, I don't know if they get hit on that because the reason they're kind of doing that is because they go like, consumer doesn't have enough money. Forget them.
Yeah,
We need
that's
all
true. But
the
like,
chips over here, and we're making right.
yeah,
And I think they're still biting on the thing of that the consumer will suck it up and just fork out. Right. At some point, that sort of game does have to come to an end. Like the
yeah,
same reason we haven't seen the rampant inflation, even though there's been some input costs last year. A lot of it's because these consumer companies know that consumers will now very rapidly switch. They won't stomach that. So
yeah,
all these companies have sort of stretched out that that duration of the increases over to a very gradual timeline and taking some kind of hit right now for it to ultimately come up, so they don't spook people. So yeah, it's strange. And then particularly house prices, probably going up as rates have come back down again, right? That puts further pressure. I don't know. All of this is when you get these late mature things that do eventually add up to some kind of crash from the consumer side in the data, retail sales, all that kind of stuff. So yeah, interesting.
interesting times, and yeah,
Yeah.
it not necessarily good or bad, just very interesting.
Yeah, I feel like that's been the conversation of today. Same when I was talking with Jonatan, we were saying it's very hard to get a clear next move, next measure, because a lot of these things are sort of speculative and quite binary, one way or the other. So it's very hard to position or put out any kind of time frame with these things. We had a lot of that stuff last year as well, like as far as the tariffs as an example, like either they're high or they're not, and it's kind of this binary type thing. And so I think we will get a lot of that whip sort of back and forth this year, but less of the momentum runs that we had. So
Yeah, that's what I was thinking.
Yeah.
If there's going to be a pullback, it's going to be a little bit stronger. It's not going to be as subdued as it was with this nice, let's say, whole year rally that we've had on a lot of the indices and a lot of the, like gold specifically. We'll still see upside. I just, now it's more geopolitical, I think. Like the driving force behind gold now is going to be very, very, very geopolitical.
Yeah.
I mean, Venezuela had one of the largest stockpiles of gold.
Yeah, they do, yeah.
And yeah.
Like top 3 or top 4 or something in the world. Yeah.
Yeah. Very, very high.
Yeah. I'll just wrap this thing up from before as well. So as far as if price goes lower, all refineries won't see profit on building/restoring whole infrastructure of Venezuela. These companies will benefit if prices go up, right? Yeah, I mean, they make slightly more money, but a lot of this is around like control aspects. Part of the reason oil prices are so low is because of what the US administration has been doing. And this goes all the way back to Biden, right? When we had Ukraine, Russia pop off and energy complex across the board went, skyrocketed, oil prices right the way up. That was also at the time of peak inflation, so it was really hitting the consumer. The US unloaded the SPDR, so the Special Petroleum Reserve, and now they've kept that pressure so that oil prices do stay down. Trump's vocalized that very much openly as well with tweets and all that, and obviously sending those signals to the Saudis, OPEC. You've got the Russia interplay selling it on the back end. So there's still full supply of oil because Russia has never really stopped. It's just going through back channels. The only lift you really do have to that is that the US and Trump has said they are looking to now restock some of that special petroleum reserve, right, after they've depleted it all, since prices are low. So that will keep prices kind of bid, but ultimately there's still that downside pressure, which is why we've had this kind of just long lingering low 60s type channel. So I think we'll have more of that. It will just be a bit more of a dip into the 50s. So like how we had kind of, call it 58 to 65 was kind of the general majority time traded range through the back end of last year after we had the Iran thing go away. I think for now we'll see sort of 62 to 65, sorry, 55, and then possibly some kind of further dip to like 50, 50, 53, 52 as the extension, and then sort of just trade in that $6-7 range for some time. Because you got countervailing things on both sides, basically. So there you go.
Awesome sauce.
Yeah. Oil.
Yeah. In South Africa, the if the oil price goes up, it is both a good and a bad thing for us. It's a bad thing because, first of all, our gas prices will pick up, so like petroleum and so on will go up. But the petrochemical companies that are here are bound to the sale price. So obviously, if the oil price is higher, they're going to have to pay more for the oil itself to use it, but they themselves can sell their diesel and petrol and stuff like that at a higher price as well. So it's bound to that amount. So yes, the intake is going to be more expensive, but what they can produce is also going to be is going to be able to be selling for a higher price as well. So it's a good and a bad thing for them. So it's good for them if the price itself kind of like stays in a nice median. Otherwise, that they just everything is screwed, pretty much.
Yeah, we have a similar thing with natural gas where we send it all overseas, like sell it, and then we buy it back from overseas at inflated prices and then wholesale it to everyone here. It's the most.
That's what we do with diamonds. Because the problem with diamonds here is that when it gets mined, and we're not talking about lab-grown diamonds, we're just talking about mined diamonds. We have very few actually like good stone cutters, like diamond cutters, gem cutters, and whatnot. So we send the majority of our diamonds to India, and then from India we buy it back from them at a higher price.
Yeah,
it's just like okay.
Yeah. Because and then I mean, you probably sell a bunch of the gold in Africa as well over to India, and then they put that with the diamonds, right? And then you buy that back too, Yeah,
it's just I don't know, man. It's just one of those things. If it's not lab grown, then it's just like we'll send it overseas to get cut. If it's lab grown, then the cutting doesn't really matter because you can make it whatever shape you want it. But it's just funny to me that. We did the same thing with the gold mines as well. I mean, I don't know if you know this, but like more than half of all of the world's gold was mined in South Africa. There's an area called Witwatersrand, which is in like the central portion of South Africa, and that region is like 50% of the world's gold just comes from there. So y'all are taking all of the gold from here, shipped it all around the world.
Yeah. Oh man, I don't know. Supply routing back and forth is wild. It's crazy. But I'm gonna dip out there, guys.
Yeah.
So I will have to say sayonara, and I will see you guys tomorrow. And until then,
awesome.
All the best.
Thank you.
Awesome, LJ. Have a good one, mate. Pedro, are you also heading out?
Sorry?
Are you also heading out?
Yeah, maybe I can just wait. I think maybe Griff's coming at 12. Maybe.
Yes,
So I can maybe
he will
say.
be in another 6 minutes or so.
Yeah, so I'm going to stay here just a couple of more minutes instead of you being gone. Yeah, what is your take now? What are you looking at today? I can see that you are looking at euro dollar on the chart.
Yeah, I just kind of like drew it up now. I don't know. It does look like there's a little bit of a downside to it on the 5 minute. On the 15 minute as well, we have these base areas down here, and then a small little area of interest where I think price can definitely come down towards. This is it's a scalp, so it's 116.94 to 116.80, so 116.90, somewhere around there. But I think that the area definitely to come and test is either yesterday's low or this 116.82 to 116.76. But that's purely because I just don't think that the euro is all that strong at the moment. So I don't know. Like, yes, we did break yesterday's highs, but we did nothing with it. We just kind of like sat here, and then the same with pound as well. The pound, we took all of this like lovely upward momentum, and it just kind of like died off right up over here. But I think there is place for it to kind of like pull back a little bit and then potentially start pushing it back up again. But I'll wait and see for that one. I was having a look at NAS, but NAS is sideways at the moment since last night. So I'm waiting to see what New York is going to go and do there. Not really all that happy with NAS at the moment, to be dead honest with you, because I got a good sell. I got a good buy during London session, but I got a horrible buy during New York, just when I thought we were going to come and test up at the highs of Friday, and it just kind of like so I took a buy somewhere over here to try and aim for this upper portions, and it just came and cut me out. So not very happy with it. Yo, Eren,
Hello,
what's up?
guys. How you guys doing?
Eren. Oh, good.
mate.
It's been a long time since I've seen Pedro on here.
Exactly. Yeah, I've been away a little bit of a break during the holiday season.
Yeah.
And I'm back now.
Ready to go. You guys in any trades?
No, I'm
No?
not.
Okay.
Are you?
Nah, I'm not either. No. I was looking for a trade, but it ended up not entering me. So yeah, I just let it go.
Okay.
What were you looking
where
at?
was it?
It was a GU sell.
Okay.
So yeah, it's selling off very nicely, as you can see. And I wanted my entry, and it never went up. It just kept going down. I would have taken this on my live account as well. So it's unfortunate, but it is what it is. You know.
Are you still? If by any
missed
chance price retraces back to that level during the session, are you going to still try to sell it or not?
No, because it's gone past 1 hour. 1 hour of
Okay.
profit. So then I would sit out. If it hadn't done that, I would have taken it. But it's my rule to stay out then. Because if it goes back up now, it's probably gonna do it very aggressively because it's a big move. And then if it goes up so easily, then there's a high chance that the setup is disrespected because it already played. So it's an old setup.
Yeah. Yeah. No, but good move on the pound to the downside.
Yeah.
Return the euro. I think it still has potential. I like the level that Richard has on his chart there.
This one.
Yeah, potentially for price to go there. I think there is a possibility.
Could definitely go lower. I did take a NASDAQ sell yesterday. I got a very nice entry. Maybe I should share my screen actually. I won the trade. Wait. Let me
Nice.
see if I can share my screen because Richard's trying to guess what the trades are. But it's a bit hard, right?
No. I'm going to guess it. You'll be surprised how good I am at guessing other people's trades. You took a trade right from there. Stop loss up over there, 1-to-1s. So
one second, I'm not talking. 1 second. Okay, go ahead.
You did something like either that or something like that. So either there So entry 25,465, or your entry was at 25,476.
No, it's incorrect. This
I
is the
tried.
daily range of yesterday, right? This is New York of yesterday, correct?
Yeah, this is New York.
Yeah, no, that's not the trade. Um, yeah, no, it's not the trade. No, sorry, Richard. Okay, so first off, the 12-hour swept this high. So
Oh yeah, you use
this
the 12-hour.
yeah, this high is a safe spot for me for stop loss. Price went up all the way to here. This is a sell setup for me. Okay, this big zone. When price was around here, I took a sell. Here, I put my stop here, and I just targeted A1R. So my top step account is up 1.5k now because I risked like 3% to make 3%. I know the drawdown is only 4%, so that was very high risk. But today I'm going to try and look for another trade and then pass that account, and then I'll be live with the 50k if we win the trade, obviously. I was maybe looking for some longs off the sweep, but we never really got a setup or a break for confirmation, so I didn't really take it. So I'm going to wait for the New York Open now, and then maybe I'll look for a trade. Well, it's a very simple trade, 12-hour candle bearish, the usual setup. This is a old setup, so the risk is there. But the reason I did still take it is because I find this high a very safe high. I didn't think it would go all the way up there. So good catch, I kind of entered for a sell at the top of this candle, so it was a nice catch.
Yeah, it looks really good. So I think Pedro, not Pedro. Oh, but Pedro, you and Victor also kind of like have the same idea around order blocks, right?
Yes, more or less. More or less. I think that would be order block for Victor somehow. But I would be interested still on this area. But
I was definitely interested in this one, but I tried to buy into it instead of selling out of it.
Yeah,
yesterday.
I mean, this isn't like I don't really use order blocks. I know what they are, but here we have a sweep of another swing high, and then we have a break of a swing low. So that is my usual setup. I think Richard already knows by now, but just explaining it for the people and Pedro. There's a comment here. Eren banned for using the most disgusting word ever, top step. Yeah. I mean, the Fivers doesn't have futures yet, so we're waiting on it. When it comes out, that's all we'll talk about, right?
Definitely.
But
yeah. So normally a trade like that, do you take the full last? The way that you drew your box was basically on the last. I'm assuming that's a bullish candle, the white one. The last bullish candle before a massive sell-off. So that would be typically an order block in the sense that you have an attempt to push price higher, a failure, and then a catastrophic, like volumetric, sell-off. So a lot of orders, a lot of like everybody's on the same side kind of like thing. Yeah. We're all aligned. We want to sell off from here. And then if price comes back to it, then you expect a similar result, or at least if it does come back to it and it confirms that it will go down again. So what I tend to do, I don't use the 1 hour. I usually use the 15-minute or the 5-minute to get like that very last attempt to try and push it down. Yeah.
So what I would do here if I was to use an order block is I would just mark it out to the body. Now, obviously, this worked. It looks very easy to say in hindsight, right? But just forget about this for a second. I would not look for a trade off this whole order block. Like, if this was just if all I see here is an order block, right, I would not look for a trade. So my entry was kind of halfway as well through my breaker zone, which is my entry. So I was happy to take the risk. And I felt like we moved up a lot. But if this was just a order block in my eyes and not my setup, I wouldn't have even looked at entering around here. I would have at least marked out the body, and that's what I used to do. I used to trade order blocks, but I stopped doing it. I look at them sometimes for confluence, but that's it really. So I wouldn't really do that myself, but it clearly worked here. So
yeah, when I look at it, I kind of like take into consideration how was the price going into it? What was the momentum like? Did we spike into it? Did we like gradually come into it and then slow down and then kind of drop off? How volumetric was the drop off? In this case, massive drop off. So if back to it, you kind of like wonder to yourself, what is the follow up reaction going to be once we get to this point? The previous one was absolutely catastrophic, in terms of its, sell off.
Yeah.
So are we going to have the same thing? And then I'll start looking at the candle characteristics going down to the 5 minute and kind of like seeing whether or not that aligns with the idea that I have that, okay, if we're going to get to this point again, I want to see it slow down, and then I want to see sell pressure start picking up. So the volume itself and the momentum pick up on the sells, and then I'll look for an entry as an example.
Yeah.
In this case, probably too late in the day. I tried buying into it, like I said. Like I thought to myself, okay, it looks good enough for a buy going into it, and I was halfway right.
Yeah.
I got into 60 points. My take profit is 80 points. I got into 60 points of profit, and then it just went.
Oh yeah, it happens.
It is what it is.
But here in this case, what you're talking about, basically, let's say it tagged your zone. Let's say this is your zone, and you would wait for a sign of weakness. Then, if you got a candle like this, would you look for sells after that? Is what you're trying to say, or?
To a degree, yes. It's not just the candle itself.
Right.
If you go down to the 5 minute, you will see that there is a structure shift round about that point. So you have a higher high, and then you have a low that gets broken. So it pushes into that zone.
Yeah.
And then two strong bearish candles after a long bullish movement, and then another attempt to try and retest, but then we have another sell-off. And it's on that sell-off candle that I would then, just before the consolidation, I would then sell on the close of that candle.
So you'd be in a sell around here, is what you're saying?
Yes. So if I were selling out of that zone.
Yeah.
Because the thing for me is it's the confirmation. I need the confirmation that it's reacting the way that I want it to react.
Right.
So I don't just blindly put my entry point, let's say, at the bottom of that box and then put my stop loss at the top. Even though I might suspect that is the move that's going to happen, inside of me, I feel like, no, I can't do this. I have to wait for confirmation.
Yeah, right. Yeah. I mean, for me, that is my confirmation. If I get my sweep and break, that is my confirmation, really. So for me, I always wait on the candle closes as well for confirmation, but I wouldn't look for like a candle to show me signs of weakness or something. But I would look for a break of a low. So in this case, it would have been this, right, for me on the 5 minute, which is a very small zone, but I mean, it played very nicely.
That's exactly what I was referring to.
Yeah. Oh, makes sense, to be honest. And it did look like price wasn't going to go back up after that. So it's not a bad idea. I like it.
Pedro, what is your thoughts on that?
I just like the way you think about the market in terms of that confirmation, because I do like to see similar confirmation. So it's basically always price reacting from that level, and then actually to see that actually the sellers are gaining territory against the buyers in this case, so that actually price can sell off. And as you mentioned, usually you can see that in specific candles. And the candles I'm not even thinking about how the candle closes or something like that. Is actually a really strong attempt for price to go back into the tops, but then it really just gets rejected, and it's kind of there's a little bit of, I call it decision point. That moment, kind of a decision point of that candle, and usually after that, price tends to respect now that whatever candle was created in there, and then that starts working as an order block or supply level or whatever it may be, and price just starts selling off from there. So I do like exactly your explanation, because I do look for similar stuff as well. That extra confirmation, I think I like to see it as well.
Yeah.
Guys, we do have Griff waiting equity on the back end. So I'm going to there you go, and with that, Happy New Year, Griff. Happy New Year. Welcome.
Happy New Year.
And
Thank you.
Yeah, and with me, I'm going doing whatever I have to do. Thank you guys. Glad to be here. Glad to be back again. I'll see you all on Thursday. Thank you. Enjoy the live stream.
Awesome,
Bye.
Pedro.
Bye.
I get an opportunity to say Happy New Year to you as well. So I hope your new year is filled with all-time highs and just the most equity you can ever dream of spending.
Thank you. You too. Bye, guys.
Cheers, Pedro. Yo, Griff, what's up?
Not much. How are you guys doing? Nice to meet you, Eren.
Nice to meet you, Griff. Yeah, we've not been on before. No.
No, we've met the two ships. It's funny, this live stream, like me and Pedro, that's all the interaction I get with him. Like, hi, bye.
Hi, Griff. Bye, Griff.
Yeah, literally. I feel bad for him. Sometimes it's really difficult for him to find a gap in the conversation to go like, guys, this is my lunch break.
That's the thing about him is like he never takes the opportunity to say, guys, I really need to go. He sits here patiently, like the most well-mannered person ever, never interrupts. He just, okay, guys, I need to go. There's a gap. I really need to go.
He just loves the charts, that guy. More than food.
Griff, how have you been?
I've been fine, thank you. I've not taken any trades. I'll put it out there. So December, I took nothing. I'm feeling a bit out of practice, to be honest. If a trade's coming, I'm not ready.
It's a bit presumptuous of you thinking I was going to ask you if you're in any trades.
Oh, well, I'm sorry, Richard.
This is your first time back since going a little bit away, not being on the live stream, I think. You weren't here last week.
Why couldn't I make the last live stream? It didn't. I didn't realize, but my work hours at Traders Connect didn't align, and I didn't realize until like the day before. So I let Jonatan know, but I don't know if he passed on the message. So I'm sorry if you missed me last week.
I did miss you.
Oh, I'm very sorry.
Anyway,
I missed you too. I didn't get to ask about your Christmas and stuff.
Well, I was streaming on Christmas, so
I was on Christmas Day.
On Christmas Day, I opened up the stream. I closed the stream. I don't know how good it was for everybody, but I had fun.
That sounds fun. I'll have to look back and watch that if the recording's there.
It should be. It's definitely there. It's so hot in South Africa at the moment. Like on Christmas Day, it was boiling. So I went from the live stream straight into a swimming pool. So
that's nuts. It's literally just started snowing here.
Yeah, same. It's full of snow here. Like I was driving like 3 days ago and I just kept slipping on the road. Like it's that bad here. I wish I had sun.
December is sunburn weather for us. It's like smack bang in the middle of our summer. So
that's so crazy.
Yeah, we don't get white Christmases, unfortunately. No snow.
What's it called? I can see in the chat, Anto Kahoro asked about, I think he means NJ, repeating the December patterns like other years, because I think 2 weeks ago when I was on, I was talking about the NJ reversal, which has happened 2 times on December 28th, and it was like a 10% winner both times. And unfortunately, this year, we did get a nice push down. It's kind of a messy... see the charts. So yeah, let me just for anybody that missed what we were talking about, I think 2 weeks ago is when we touched on it. NJ, the last 2 years in December has had a 10% winner reversal entry, 2024, 2025, and I was ready for it in 2026 because I missed the previous 2, and we didn't really get an entry. So here's the first one. If you're following the same reversal entry model as me, so there's the first one, 12% winner, and that is December 30th. And then going to December of 2023, it was actually 23, 24. Here is the other NJ reversal. So if I put on the 12 pip stop loss again, and you can see right here, this is a 9% winner, I believe. It keeps going. Okay, if you're trailing your stop loss, this is another 11% winner, and nearly the exact same time of year, December 27th this time. So there's an ascending and a reversal 2023, December 27th, ascending reversal December 30th, 2024, and in 2025, let's see, we kind of got an ascending structure, and we did get this push down, but we just didn't get this break and retrace right here. There was nothing. I mean, you could say this is it, but honestly, this is not clean. I mean, we're breaking the lows. There's not really a clear target. If you a clear entry, sorry. If you put your entry here, you wouldn't have been tagged in anyway. So yeah, we kind of got the pattern, but not the entry.
It was very unfortunate, and it was like during Tokyo session as well. Like 5 o'clock in the morning, we started like pushing lower. 5 o'clock my time. So
I see.
Fast asleep that time in the morning, so I would have missed it in any way. But since then, it did push lower. Like
very strange though. It's pretty much the same pattern. We just didn't get an entry. I wonder why. 3 consecutive years at the end of December, we get an ascending and a push down on New Zealand Japanese yen. That's a really interesting pattern.
Yes, it is, and it's like when you spoke about it, I was like, there ain't no way.
I didn't believe it myself, to be honest.
I was like, no. Went back, had a look at it. I was like, there might actually be something in this. But like I said, I was waiting for it on NJ, just waiting and waiting and waiting. And I woke up on Monday, the 29th, and I was like, oh, it happened last night. Oh, that sucks. Because technically, if you just drew a band, like a channel from, that ascending channel, and then you literally just looked for the breakout.
Yeah, exactly.
Channel, you would have gotten it. If you just waited for the breakout on the 29th, you would have gotten it. And it's just like, okay, fair. It's just unfortunately we just didn't get it.
Move down. I mean, at the lowest point, it had moved, what's that, 93 pips. So if you would have just maybe taken a trade as soon as you started seeing a shift in momentum, there's a good amount of profit here, depending on your stop loss. If you got out at the bottom.
If you took it above the last swing point, that would have been 30 pips. So you could have had a 3R trade.
Yeah. Very cool. We'll have to watch out for that next year. We got to wait a whole year for it now. But I feel like patterns normally come in threes. I feel like you might, by the third pattern, everyone's seen it.
I mean, this one already did not 100% conform to the last 2 years. So you're already seeing a bit of a change. So going 2026 into 2027, we're not going to get it at all.
Probably not.
They're onto us, mate.
They're onto us.
They're onto us.
I think that's always the way, you get an amazing entry and you're like, okay, I have to keep an eye out for that. And then you get it a second time and it's like, okay, there's a pattern here. The second entry is when you determine that there's a pattern. And by the third entry, that's if it does happen a third time, that's the last time it happens. Because by the fourth time, everybody knows about it and it's never happening again. So really, you have to notice these patterns when you get them consecutively. Because the third time, it's probably going to be the last, in my experience.
Yeah. Unfortunately for us, Griff, you jinxed it. When you mentioned it to everybody, the people in the black suits with the sunglasses were like, he knows too much.
Yeah, I won't tell you guys next year.
Yeah, send a private DM and just say, hey, noticed a pattern. Then the CIA and everybody else are going to be like, oh, he's just sending it to one person. It's okay. Nobody really, that person's going to react to it. It's fine. It's fine.
Yeah.
But when you tell it to all of the people watching the Fiverr stream, then all of a sudden it's too many people.
Yeah, unfortunately. But yeah, it's interesting seeing such patterns. I don't know of any others, to be honest. Any seasonal patterns, that is.
Well, we do sometimes get the Christmas rally, in some of
Yeah,
the
that's
indices,
true.
but we just didn't get it. Not
I
this
feel
year, at least.
like we did get a Christmas rally on like the UK index, but I know not because I follow the UK index. You can see it's well, actually, it is in my watch list. But the only reason I know that there was a rally is because my grandma emailed me saying,
grandma.
"Why has the FTSE 100 gone up?" I
Grandmother
was like,
sends
I
you a
don't know.
message. Not Merry
I'll have to
Christmas.
Google it.
Not my grandson, I'm going to give you really nice presents this year. No, none of that. It was, why is the FTSE going up?
Yeah.
It's nice
funny.
to hear from you as well, Grandma. Love you too.
That's pretty much what happened. Yeah, right here. There's a random. I don't know what this is. I think I don't follow indices, to be honest, but I googled it and it said it was related to, I think, mineral like gold and silver prices going up, and the UK having some mining investment. I don't know, because this is a bump on a 1 hour, but also probably, you know, if you zoom out, you can see this big up move. So there is somewhat a Christmas rally.
There was, which day
Some
was
happy buyers.
on which day was that?
That random
FTSE?
spike.
Yeah.
That was January 2nd. So
January.
the first trading day of 2026.
Oh yeah. Well, we had a little bit of a sell-off on gold on January the 2nd. Well, actually, no. We started the day off. We ended the day very close to where we started. We had a bit of a rally during Tokyo session going into London. London had quite a bit of a sell-off as well, but we kind of ended it close to where we started as well. So overall,
Interesting.
very flat.
You know, Q1 2026 is always like, well, not 2026, but Q1 of each year tends to be my best trading quarter. So I'm hoping get some nice trades. 3 years
So-
ago in Q1,
Yeah.
I made 80% profit, and that was my profit for the whole year.
80%. What?
Yeah. But then literally then Q2 I made 0%, Q3 I made 10%, and Q4 I made 0%. So that's been my best trading year ever, and it was basically all made in a month.
So how did you risk that?
It's
How did
1%
you manage
risk.
your risk in that? Wow. Okay. Wow.
Yeah,
That
it
is
was.
insane.
I think it was exceptional times, to be honest. But I'm
Gotta
always
start
keeping a
doing that.
lookout for Q1 each year, hoping that I'll get some crazy big trades again.
Yeah. Hopefully, I mean, if you can do it once, you can do it again, right?
Yeah,
History is doomed to repeat itself.
yeah. There's a
Um,
seasonal thing, I suppose. Maybe.
Maybe that
Maybe.
was like the end of your cycle. Like your 3-year cycle was when you made 90% in 1 year, and then
Yeah.
just it kind of like started dwindling off because people started noticing, what the hell is Griff doing? Griff,
Yeah, because since then I've been. I can say now in 2025 I made 0% profit.
whole of
Exactly
2025.
0% basically, and then 2024 was 10%, so way less than I expected. And 2023, despite the Q1, was basically just the 10%, you know, throughout the year. So since Q1 of 2023, I've had 10%, 10%, and 0%.
oh,
Very slow, very, very slow. Years of trading.
I was about to say. So, what are you going to focus on this year? So, brand new year. You know that your first quarter of the year is your most successful historically. So, what are you going to focus on going into the new year?
Well, I definitely need to be more active on the charts. I think I've been a bit lax because I can't let myself be lax because I have so few trades. I can't let myself begin to anticipate there being no trades, because sometimes, like in September last year, I had 4 trades in a week out of nowhere, and so I need to be prepared for groups of trades. So yeah, I suppose Q1 I just need to be very, very active on the charts. And yeah, the main thing I'm going to be focusing on this year is improving my win rate. I'd prefer to have a strategy with high win rate, high frequency, low risk reward, whereas my strategy is high risk reward, low frequency, low win rate. So the opposite of what I want. So yeah, I think I've spoken about that before, but I'm going to be experimenting with different strategies, trying to find a strategy with high frequency, high win rate.
So when you trade like this, do you trade with prop firms or just on like?
Yeah, I do. My prop firm accounts, they go up. I get a payout and then it's just flat, and it's like a slow burn. It's like death by 1,000 cuts. You know what I mean? So I have to risk on my prop firm accounts. I have to risk like 0.25% or 0.5% because
Yeah.
I have really long drawdown periods, and then I just randomly after 6 months hit like a 15% winner.
Oh, wow.
It hasn't always been this way, but in the last 2 years, 3 years, that's just how it's been for me. Like 21, 22, I would be getting, quite regular monthly gains, but the last few years it's been in bursts for some reason, and I need to change something.
That's sick, because for me, I trade like kind of the opposite, I'd say, I trade for like a 1-to-1, 1-to-1.5, try and be safe.
Yeah,
And you just go for the big trades. It's
exactly.
all or nothing. I like that.
Yeah, it's a lot harder,
Yeah,
like
100%.
psychologically, but I find that letting your trades run, you do end up getting much, much bigger percentage. So
Yeah.
I've tested quite thoroughly, like fixed risk reward versus trailing my stop loss with the highs and lows. And although I have a much lower win rate, I tend to make more percentage. And I guess that's what matters the most.
Right,
But
yeah.
prop firms, it means that I get very few large payouts, whereas for your strategy works way better for prop firms because you're going to
Yeah.
get regular payouts.
So
Yeah.
what advice would you give to someone that struggles with holding trades, let's say? Because you clearly know how to hold trades if you're holding for that percentage.
Yeah, I think just knowing your strategy really, really well and having discipline in your personal life. Because if you don't have discipline in your personal life, you can't have discipline in your trading strategy to allow those trades to run out and like actually follow your plan. And then yeah, you need to have loads and loads of data to be able to have the confidence to be able to hold the trades in the first place. Like the only reason I can do it feels crazy sometimes, I've got like 20% running and I've got nothing locked in. It could come back and tag me out for a loss. And the only way I can do that is because I've got all the data that it works out in the long, on the long term. You know what I mean?
Yeah.
But it's also like the full belief in that data. It's like
Yeah.
knowing that the data that you have is quality data and that it is something that you can see in the moment, not just in hindsight. So the quality of the data plays a massive role in whether or not you're going to actually believe in it. But then not only the data itself and the belief in it, it's the belief in yourself that you did a good job with doing your backtesting and looking at the data. So it's like a multifaceted belief system of,
Yeah,
I've got the
But
data,
then-
it's good, I believe in this data, I'm going to take the trade. Yeah.
exactly. And even though the data is good and the strategy makes me good percentage over the large sample size, like I try to use the biggest sample size I possibly can, which is why some years I found recently I make 0%, and other years I make double my money. You know what I mean? But that means that although the strategy is good, it's really hard and unenjoyable. So working on trading all day is not very fun, to be honest. But makes a nice little side income, I suppose. But yeah, I
Yeah.
guess that's why I want to have a more fun strategy like you, Eren, where you have lots of little winning trades. That sounds really enjoyable, even if it comes
Yeah.
at the cost of a small hit in percentage, at least with my style of trading. Yeah, I think I'd prefer that, especially for prop firm payouts, because
100%. Yeah.
they're not going to pay you out if you get like a huge payout. They're going to
Yeah.
try and avoid it. Whereas if you're getting
Yeah.
lots of little $1,000, lots of little $2,000 payouts, you're going to fly under the radar and they just click the green payout button.
Right. Yeah. I mean, that's the thing with my type of strategy. For example, I guess you can be more consistent on winners, but the downside to that is sometimes you feel like it's not enough. Sometimes greed gets involved, So that's why I myself have decided to like refine everything to whereas every account I trade on matters. So let's say I'm trading on a live account, I'm fine with a 1-to-1. But if it's a challenge, I might just hold it, you know,
I
because
see.
it's a
Yeah.
challenge. You know what I mean? So it depends on what account I'm trading as well to me. Whereas for you, it sounds like you don't really care about what account it is. You just hold regardless.
Yeah. The only thing I change is the risk per trade.
Yeah. And that would be to like 0.5, 0.25, right?
Exactly. That's on funded accounts. And then on the challenge accounts, I'll risk 1% because they're a bit more expendable. And then on my personal account, I'll risk 2% because I can handle the drawdowns
Yeah.
on my personal.
Right. Yeah.
Do you ever get tempted yourself to hold trades on your prop firm accounts? You know, if you're in a trade and you closed it out for a 1-to-1 and then you see that after you closed the trade it went flying and you know it just went straight up like it has on these charts right here.
Yeah.
Do you ever get FOMO, or you know, how do you manage those feelings?
To be honest, not really, because I followed my plan, right? So the amount doesn't matter to me at that point. But I will say sometimes when I'm on like a decent sized live account and that does happen, it's like I missed out on this much money. So
Yeah.
if I'm on a challenge, it does nothing to me. But if I'm on like a live 100K, live 50K, or even a live 200K, it will sometimes hurt a bit. Um, but usually I'll just be fine with it, you know?
Yeah.
So, for example, like 3 weeks ago, I think it was, I took a GU buy on three accounts. So, I took a buy on a challenge and on two live accounts of mine. One was a small 10K, and then the other one was a 50K live account. And on the 50K live account, I closed the trade at a 1-to-1. And then on the challenge and the smaller live account, I held till a 2R. Um, so, that's how I managed that. Now, it didn't hurt me that I closed on the 50K early because if I get a payout on a 50K, that's 500, but on a 10K, 1 hour is 100. Like that's not even enough for my target that I need with that prop firm. So I really just manage it like that, and then I'm always fine with a 1 hour, depending
Yeah.
on the account.
That's great. I suppose as long as you don't get into like the hypotheticals too much, like, oh, I could have made so much
Yeah,
money. As long
yeah.
as you have the fortitude to avoid those thoughts, then I guess it isn't a problem.
Yeah, I avoid it by just closing the charts, honestly. You know?
Yeah, like I remember when I first started trading years ago, I would be drawing on the risk reward tool of like missed
Oh,
trades and stuff, and you can't do that because then you're literally, you know, if I miss a trade, I don't know how much I missed out on. I
yeah.
don't do the math. That's the
That's
way to
probably
do it, I think.
healthier, to be honest. That would keep you more sane.
Yeah.
Yeah,
Um,
you should never do that in any way.
Yeah,
No.
You never like
definitely
look
not.
at it like, oh, what could have been,
yeah.
because
It doesn't
then you're
matter,
going to
right?
start looking for those what could have been trades, and then instead of taking a decision that mathematically and financially makes sense, instead of doing that, you're going to do the speculative what if.
Yeah.
I'm going to stay in this trade when all of my data says cut the trade. So
Yeah, it makes no sense, right? Yeah.
You know, I've had an interesting thought because Eren and I have realized our trading strategies are basically opposite of one another.
Yeah.
And if you're going for 1-to-1 risk reward, that means you need at least a 50% win rate to be profitable, right? So I
Yeah.
assume you've got a pretty good win rate.
Yeah.
Whereas my strategy, I've got my average risk reward is like 5, but my win rate is like 30%. I feel like the difference in our strategies is that yours is more like edge dependent. Like you need the trade to go in your direction. Like you need to
Yeah.
have an edge, a technical edge. Whereas I feel like maybe mine is more like risk management dependent, if that makes sense.
Yeah, it
Because
does.
I
Yeah.
suppose it doesn't really matter so much if the entry is accurate. It just matters that I'm trailing the stop loss. I don't know if what I'm saying is making much sense, but yeah, I feel like you need your trades to be going in your direction, whereas I just need my trades to be going in my direction sometimes. Yeah.
No, I know what you're saying because at a 1-to-1, if you lose and you win, you're back at the same spot.
Yeah.
At a 1-to-5, you can lose 5 times, then win, and you're back. So that's 100% true. But that's the thing with my trading. Like, I know the difference between my good setups, the ones that usually win, and then the worst ones. So the worst ones I'll take, not the terrible ones. I won't take them, but like not A plus, right? I'll take those on the
Yeah.
challenge. But then on a live account, if you take the A plus setups with a 1-to-1 with my win rate, it goes so well. Like
Yeah.
one of my live accounts in the last year, I think I've already told Richard this. I've done 15 payouts on, and that was
Yeah, you
15.
said yesterday.
Yeah, I think I lost like 2 trades in total on that account, and the rest are all just wins, you know?
Yeah.
So that's the edge that I have, you know? Like I won't lose that much, that many times when I only take the right trades. Now, obviously, it can go wrong. You can go on a bad run, but if you only take the right setups with my strategy, the edge is there that you will win more than lose.
Yeah,
So
that's interesting because then with my strategy, sometimes I have to take like I try to only take S tier trades, but sometimes I'll take A tier trades because I never know which is going to be the one that runs to 8% profit. So I
yeah.
have to take sometimes the more average trades will outperform the really high quality setups, if that makes
Right.
sense.
Yeah, it does make sense. It does because sometimes I'll take because usually I trade the 1 hour, but sometimes I'll take a lower time frame setup and it will run for like a 4 hour. And I'm like, why don't I keep doing this? But then you go back to reality and you know that with your data that the other thing is more profitable. So sometimes it can work, but most of the times for me when I take a harvest trade, it just loses.
You know what I was saying earlier about how I focused like purely on profit and I completely disregarded win rate, which is why I'm in the position that I'm in now.
Yeah.
And although I think that makes a lot of sense, and it's like I said, it's a bit harder. One thing I never considered was how quickly you can compound an account with a high win rate strategy.
Yeah.
So on paper, when you're back testing, most of the time you're going to be looking at uncompounded profit, just win plus loss plus win plus loss. Whereas you're not looking as though you've got a 100k account and you're seeing those wins and losses compound on that 100k balance. And I think that's one other reason that I'm looking to increase the win rate of my trading strategy and actually make it overall less profitable, is because uncompounded, the profitability may be less, but with a high win rate strategy, the compounded profit is going to be so much more because you've got such a smooth equity curve and so few losses.
Yeah. Yeah, I mean, the compounding is way easier for me, to be honest,
Yeah,
100%. I
exactly.
mean, if I put money in a personal account, I just know that I could do well on it. But prop firms are just such a big advantage, so I'm not doing it yet as at the moment. But I do think that if I was to just stick to a personal account and try and compound it like that, it would be way easier. You know, when you're trading a challenge, sometimes sorry, you take the wrong trades because you want to get it over with, right?
Yeah.
But you wouldn't really have that on a personal account. Well, in my case, um, so yeah, compounding is probably harder for you, but when your trade does hit, you're up. So it's a bit
Yeah, I guess no matter if you zoom out a lot, like my account will be compounded as well, but yours
yeah.
is just going to be compounding at
That's you,
a
Richard.
way faster
Thank you.
rate. Get blessed. Yeah, yours is just going to be compounding way faster, which I always I underestimated, and I didn't realize until later on the power of that, I suppose.
Yeah,
And particularly, yeah, if prop firms is the kind of step into trading, because I imagine we don't all have 500k personal accounts to trade just yet, which is why we're trading with prop firms.
yeah.
High win rate strategy is definitely what you need for getting maximum payouts.
Yeah, it's definitely beneficial for prop firms. I'd say that. But that doesn't mean you can't lose, right? You know, even if you have like a 70% win rate, you can still lose like 3 to 4 trades in a row. So with my risk, that's a blown account. Um, so it depends. It depends.
Yeah. Do you use a fairly large stop loss with your high
Yeah,
win rate strategy?
yeah. I give it room. I give it room.
Yeah.
I'll give it a lot of space because most of the times when I used to trade like low stop loss strategies, I'd get tagged out and it'll go to my target. Now, sometimes giving it space means you need more of a move, right? So that's the downside to it.
Mm.
But that's why when I trade like my strategy, it's usually long trades, like a few hours. so I won't even look at the chart once I'm in. I'll just put my alerts and wait. And if I have a target that once price reaches that, I don't want to be in the trade anymore, I'll put an alert on that as well, and then I'll just go out of trade, right? So it's very easy to manage my strategy. I don't need to be on the charts 24/7. Yesterday I looked at my candles and I didn't need to wake up for London. I did still wake up in general, but like
I was about to say.
no. But like I know I don't need to wake up to trade. Like I don't need to wake up at 8 a.m. to trade because I know there's gonna be nothing, right?
Do you trade mostly the 1 hour? Because that's the same as me.
Yeah, mostly 1 hour.
Yeah, cool. I was gonna say something else. Oh yeah, have you ever looked at maximum adverse excursion (MAE)?
Never.
No, I think that's something which is it sounds complicated, but it's basically just how much the trade went against you in pips before it went in your direction. And it's really interesting because you can it's basically a way of finding like the perfect stop loss size. So for me, most of my winning trades, they pull back very little before going in my direction.
Right.
Whereas most of my losing trades, they just pull straight back. You know what I mean? And many, maybe small winning trades where I made like 1%, 2%, most of them have pulled back against my, like quite deep into my stop loss before making that 1-2%. Anyway, you can put all this information in a chart and you can figure out the perfect stop loss size to maximize your winning trades. Maybe I used to have a chart for it.
Yeah, I mean that sounds good because for me, like I use a big zone to enter, and most of the times when I enter, I will be in a bit of drawdown. So that sounds good, to be honest.
Yeah, it's all about, I suppose, how much, because it's difficult trying to figure out what amount of drawdown you really need, because you can definitely have a stop loss which is too big. Yeah, I'll try find this and I'll bring it up in a bit.
Yeah, that would be useful. I mean, I'll definitely look into it in my free time.
Yeah, you can do that. I'm just quickly going to answer a question here. There's a question earlier from Nick saying, Richard, I saw you looking at GU. I'm short on GCAD from double top on the 4 hour today. So what I just did is I just went and quickly marked up what I was seeing on GCAD. I don't trade GCAD, so this is not advice. This is just what I'm seeing. And then he followed up the question by Rich. What you're showing is what I'm going for, sold at 1865 and looking for more sells when retesting. Good trade, you think? So if I just look at GCAD on the hourly, we had quite a bullish push. So we had a change. It was like a little bit of sideways action over the whole of December, basically. And coming into January, we had this breakpoint where we finally started pushing bullishly. So we're making higher highs and higher lows, and we're making these base points, these areas where price kind of like back and forth. But now we've come to a point on the hourly where we've reached yet again another break point. Now, I don't know whether or not it is just more of a pullback. So I've marked it out. We've got a base area that got broken. We had a high, we had a low. We've made a lower high, we've made a lower low. Now I need to see whether or not we're going to come and test this base down here. Whether or not it's a good trade, only you would know, my friend, because your strategy is what you're basing this trade on. From my point of view, there is a potential that we can come and test back down onto this base area, purely based on the fact that we have this attempt to push higher and then fail to push higher. So you can basically look at this whole section here as if it is a upward trend, and we've broken that trend now, and it seems as though there is a little bit more volume trying to push it lower. Because the way that I look at it is the idea that whenever there is attempts to go in the opposite direction than what the market is doing. So in this case, we're very bullish, but there's these small little attempts where the sellers try and break this upward trend. And you'll see that it gets stronger and stronger until eventually it breaks. until eventually this upward trend gets broken. But now the question is it a complete break, or is it just a little bit of a retracement, gathering up a bit more energy and then continuing higher? So I wouldn't full send this for sells personally, but I would definitely try and look to get back to one of these bases. I don't know where exactly your stop loss is, or how you would have structured your trade itself, but I would always say, you know what, follow your plan specifically. To me, it looks good. Like, I can see a sell at this point, or at least to this point. I wouldn't hold it for much longer than at least down here. Let's say 185.35 to 185.27. I probably wouldn't hold it to there. I think the lowest I would go is 185.73 to 185.50. But other than that, it looks good. Anyway, did you find what you were looking for, Griff?
Oh, I did. Yeah, I got it up on my charts. Thanks for sharing that, Richard. I was just looking, and there's a guy in chat called Dubbercore FX who is saying about how we've never shown any live trades, but I think that's actually mistaken. Will is often showing live trades. I think LJ shows his MetaTrader quite often as well. Personally, yep. I don't show my MetaTrader, I just show TradingView, but I've got my YouTube channel linked where you can see me trading live. So yeah, if you're concerned about whether or not we're real traders, there you go. Yeah, so here's something which I just thought of, which I haven't thought of for a while. And this chart led me to reduce my stop loss from like 12 pips to 10 pips and just increase my profitability slightly. So basically, this is a chart that shows the maximum adverse excursion up the left. I put MA, but it's actually MAE. And this is just how many pips a trade went against you before closing. So you can see that my biggest trades, you can see this kind of correlation where my biggest trades go against me the least. So I've got like a 13% winner here, a 10% winner over there. And, they were only pulled back 1 or 2 pips, which means, if I would have used a 3 pip stop loss on these trades, I would capture all these trades and kind of get rid of everything above.
Yeah.
And these would all be absolutely massive trades then. They wouldn't be 13% winners anymore. They'd be like 40% winners. Anyway, based on this chart, I went through all my different currency symbols, all my different patterns, and I found the optimal stop loss for each one. And I determined that I don't really need a stop loss larger than around 7 to 8. Most of my trades are, you can see below that black line. And I would be keeping most of my winners while making them larger and getting rid of a few winning trades and make, losses. So I'm making my win rate a lot worse, but I'm increasing my profitability by a lot. And in your case, Eren, you could potentially use something like this just to increase your win rate, because you can keep using a 1-to-1 risk reward, and you can just make sure that those trades that that they're hitting the 1R relatively quickly, I suppose. I don't know. But yeah, in my case, I decided to use a 9 pip stop loss for a long time. And then I realized spreads were a thing, so I added a pip for spreads. So I use a 10 pip stop loss everywhere now, but I can reduce it further. But yeah, God, I don't want to reduce my win rate anymore.
So just a question: what platform or whatever gets you this data? Like, you backtested and put it in, and it shows it on the chart?
So in my TradingView, when I'm backtesting bar by bar and I use Notion, what I do, say I take a trade like God, I don't know, all the trades I can see are like 0 MAE. Maybe I take a trade, I'm trying to see a trade that goes against me a little bit before going in my direction. So maybe I take a buy right here and I target I target this right here. Something like this. So this, say I've got a 20 pip stop loss, what I would do is I would see how much the trade went against me before closing, So in this case, it went against me 14.3 pips. So that's the MAE, and I would put that in my trading view, in my Notion journal, along with the profit.
Yeah.
And then one day I just put all the Notion data in an Excel spreadsheet, and yeah, I got all the MAE values against the return, plotted it, and then you make this really pretty chart. Normally you have the return on this side and the MAE on this side, but I couldn't do that for whatever reason. And then ideally you want to plot a line like this to try and figure out around where the majority of your winning trades are, and then you just remove everything kind of above. It's a visual thing. You can see the fewest trades are here. So I just used a 9 pip stop loss.
I think this would be useful for me because my zones are quite big sometimes. So I'm not going to adjust anything on my trading, but I might check it out because a lot of times I'll be in a trade and it will go up against me a bit, for example, in a sell. And then I'll be like, if I entered at that time when it went up off that little rally, I would have hit my TP like off a small move. You know what I mean?
Exactly.
So sometimes that happens to me where I'm like in the trade off the initial entry and it just almost hits my stop, then goes down a bit and just consolidates. And if I did find a better entry, I would have hit TP like a long time ago. So it's just something that could definitely help me, to be honest. Thank you.
No worries. And I'm sure there are plenty of times where, maybe you've used quite a big stop and it comes really close to hitting your TP and then it loses.
Yeah.
I bet that happens. And then at least this way, you could have used a slightly smaller stop from the beginning and your TP would have been hit. So you can actually use it to, you can use it in many ways to increase your win rate or to increase your total profit and like kind of find the optimal stop loss.
Yeah, no, it's definitely ideal.
It's like a bit of a balance point.
Yeah.
Like finding what works best. Like you don't want to go too small, but for, like you're saying, Eren, for you feel like you're going a little bit too large on it.
Yeah, sometimes.
You're giving it room to breathe, which is always a good thing. But then you kind of like have the inverse of thinking, okay, so if I'm only ever going to get 1-to-1s, if it's that large, if I cut it down, let's say by half, because majority of my trades don't even reach the 25% threshold, I can get 1-to-2s instead of 1-to-1s, that kind of like thing. So it then changes your expectancy to the point where you now no longer need your 50% to be profitable. You only need 40 or 30%, depending on how you change it. So
that's something I could use instead of going to the lower time frame, because the lower time frame is a bit inconsistent for me. So if I can apply that to the higher time frame, that can be better, I assume. But obviously, I don't know yet. But we'll see.
No, that's great. I'm glad that's something that I was able to show you. It's just something that I thought of because of you mentioned having quite a big stop loss.
Yeah,
because it's very difficult to find an optimal stop loss. Like, do you do a fixed value? Do you put it above highs, below lows?
Honestly, I just
and it's
mark
difficult
out
to
my
compare different sized stop losses because it changes the results so much. But yeah, MAE, super easy way to do it. You can do it in an afternoon if you've been tracking it. It doesn't take long to go through the data you've already got and just add MAE in as well. You just go through each trade, count how many pips went against you before it closed, and put that in with the backtesting data.
Yeah, I'll just open my MetaTrader and just go back, right, as well.
Yeah.
Spend the weekend. So spend a weekend looking at all of your trades, how they went against you, or how deep into drawdown they went before they went to take profit, that kind of like thing.
Yeah.
Like my brother coded an EA for me that I was testing based on a strategy that I had, and we were doing the same thing. All you have to do is there's a setting that you can switch on that EA to kind of like find the perfect stop loss sizing. And take profit sizing, and you kind of like let it play out to see how it goes, and you get the MAE data from that as well.
Yeah, no, that's very helpful. To be honest, I think the one thing with my stuff is when I'm trading the yen pairs, my stop loss is so big sometimes. Like, I'll have like a 60 stop loss sometimes on it. And for yen pairs, that's not too much if I'm swing trading. But I've had it a lot that during Asia, I would take a yen pair trade, and it will go up 40 pips even in my direction, and then it'll come back down and stop me out. So yeah, hopefully I can apply that, especially for the yen pairs. I think on EU and GU, my stop losses are usually still fine, like in between 15 and 20. But like on the yen pairs, they're just
The
way too
yen
big.
pairs. I'm
Yeah.
with you on that.
Yeah.
Yeah, yen, UJ during what was it, February, between February and April of last year, I decided nope to UJ. I don't want to look at it anymore. I've been burned too many times with silly movements, just silly.
Yeah.
Yeah, they're very unusual, but then you can also get those crazy reversals, which we were speaking about. Yeah, most of the time it is just chop.
Years. Oh, I marked out a sell on pound dollar,
Yeah.
which is currently running at a 1-to-1 at the moment.
Nice. And my
Didn't make it
trade
though,
is
just marked it out.
ending as well, man. It's at a 1.5 R now, my sell.
On which one?
GU as well.
You also
Pound
did sell?
dollar. Yeah, no, I'm not in.
Oh, you
But I
marked
was
it.
gonna take one. Yeah, it never entered me. It just ran without me. At least my bias played, I guess. EU sold off nicely as well with no entry. And my dollar bias is playing. I had a bullish bias and it's ending. So
Same movement on EU
yeah,
and G.
yeah, exactly. It's
very
nice to
close.
see the volatility though. Like it's the first week of the year and everything's moving very nicely. So we're getting good PA. That's good to see.
Yeah.
Griff, you were talking about a while ago already about you looking at potential lower time frame strategies, higher hit rate, that kind of like thing. And we were discussing, you and I, about taking that exact strategy that you have and just bringing it down onto a lower time frame and seeing whether or not it's viable. The same, wait for a break of a trend, retest, and then go in the opposite direction. Have you had an opportunity to kind of look at that a little bit over the holiday season?
No, I've not, unfortunately. In December, I don't really do much backtesting. I tend to take the month off. I have to get my head back on it now. But yeah, I've been experimenting with so many things, Richard. I'm sorry I've not tested that because I'm sure you'd find the data quite interesting yourself. But it's definitely, it's on my to-do list. I've got a lot to do.
Okay, well, good luck with that because I know that your time is almost coming to a close now. But
yeah,
I really enjoy your data because I know that you're a very data-driven person. And then the idea that you were going to take it and then potentially do it on the lower time frames, I was very interested to see what you found. I've done some backtesting myself on that exact same thing, but I don't know whether or not we would be looking for the same thing. So it would have been difficult to compare. Just
yeah.
Based on what I thought you were going to be doing instead of like seeing what you were doing,
Yeah, I'll let you know. I am a fan of the 1 hour, and that's where all of my experience is. But yeah, it would be the easiest way to increase trade frequency is just to drop down a couple time frames.
Yeah, just like go to half an hour and then see if it plays the same, and then go to the 15 and see if it plays the same, and then
yeah. Then I need, that's one problem solved, and then I just need to figure out win rate.
Strike rate, yeah, win rate. Ugh.
Yeah, I just changed I think with my strategy, if I just changed my risk reward to a 1-to-1 or a 1-to-2, I don't know how profitable it would be because, like, the entries are designed to just catch those huge moves as opposed to just like a high probability small move, if that makes sense. Yeah, I'll let you guys know.
The higher your win percentage needs to be because you have more opportunities for losses.
Yeah.
Where if you're going for a lower strike rate but a much higher risk to reward, you don't need to be as correct as often as you would have needed to for the other one. So I think that the trade-off is always the problem. It's like, what do you aim for? And the balance is the most difficult thing, I think, between the two.
It's very fine balance. It's an art form. Right, well, I better shoot off. Thank you so much for having me, and it was really nice chatting with you, Eren. Nice to meet you.
100%. Nice to meet you, man.
And I'll see you next week, Richard.
Yes, you have yourself a lovely week, and then I'll see you next week, mate.
Thanks, guys. See you both. Bye.
Bye-bye.
Cheers, Griff.
Take care.
Bye.
First time for you trading with Griff, Eren?
Yeah,
Or
yeah, first time. Yeah,
chatting with him, yeah.
yep.
Yeah, I have two sections during the week that I really, really look forward to. And it's Tuesdays for Griff, because
Yeah,
Griff is a very data-driven person, and I feel like I'm a very data-driven person as well, very logical, maths and numbers and whatnot. And then
Yeah.
on Thursdays we've got Richard Wells, which is the psychology side, and I really love the psychology
Oh,
side
wow.
of trading. So
Yeah,
my two favorite points is that I do love the whole week, obviously, but
yeah,
those
yeah.
two
But those,
specifically like standout points.
right. Yeah, no, I mean, it's nice to talk to people that trade differently too. You always learn something from them.
Remy, do you mind just putting up either myself or Eren's chart, please? Because Griff has gone off, so if you don't mind, please. Yes, Paulus, we're working on that. Myself and Eren don't have control to move the stuff
Yeah.
in the background. That's why we cannot bring up any of the chat. So we have a producer named Remy. So we're just waiting for Remy to just bring the chart up. There we go. Thank you, Remy. Very, very appreciative to you, Remy. There we go, Paulus. I'm just going to have a very quick little look at chat. Let's just see. Sorry. Let's see if there's a good question. Yeah, Dubakor. I think that there might be a misconception about what we're looking at when we're talking about live trading room. We're talking about live information. So the information that we're looking at is live. It doesn't necessarily mean that we're going to be taking a trade. And to force a trade while you're on the live stream, I think it's a problematic thing. So you should only ever take a trade when it aligns with A, your analysis, and B, your strategy. And if it doesn't happen during the live stream, don't force it, because what you're doing is you're reinforcing bad habits by doing that. So I understand that everybody has their opinions about the live stream, but the intention of the live stream is to do analysis. It's to be an area where people can rock up, they can share ideas. Doesn't necessarily mean that we're going to be taking a live trade specifically. So I just want to maybe challenge that misconception a little bit. There are people that take live trades. Will is one of them, definitely, that takes live trades. I myself am also getting to the point where I'm taking live trades, but I don't always get a setup. I'm pretty sure that Eren, if you had a setup, you would have taken a live trade.
100%.
Right,
I mean, if that GU cell entered me, I would obviously talk about it. I think there's a thing that some people don't know because they don't really have the experience. Day trading does not mean you're trading every day,
Exactly.
So if they knew that, if they were experienced enough to know that, they would know that we're not always going to be in trades.
Yeah. I think it's more important, for argument's sake, we had Nick just earlier, one of the guys in chat that was talking about his trade and just wanting maybe a second opinion.
Yeah.
Saying, listen, do you see the same thing that I'm seeing? So I think that's great, because you've built your own strategy, your own idea, and you're trading that, and you kind of just want, let's say, more of a seasoned reaction from somebody else to say, Eren, I trade similar to you. Do you view this the same way as I do? And then getting that information, which I think a lot of people are looking for. Because let's be clear, we're not a signal service, so we're not going to give signals. There's a disclaimer in the beginning of the stream that kind of says that this is for entertainment purposes only.
Yeah, we're not here to give you financial advice or trades with targets typed in chat. I do have to go now, Richard. I'm sorry to leave you.
No problem, mate. Victor's in the background, so.
Yeah, it was very fun to talk to you guys. Hello, Victor. How you doing?
Hello. We're not a signal service.
No,
I
we're
don't
not.
understand. I thought we were. I thought that was the whole purpose. What are we talking
Misconstrued
about?
information. Sure, misconstrued.
How is everyone doing? Eren, nice to see you again. We will be sharing charts soon again, since I understand you are on on your way back to off screen?
Yeah, I have to go, unfortunately, but it was very fun meeting Griff as well, and talking with Richard again. It's always great. So I'm gonna go now, guys. Have a good stream, and nice to see you again, Victor. Take care, guys.
Eren,
Just
take care.
hope to see you on the stream a
Victor.
lot.
Yes. Bye bye.
Bye. See you again. All right. So that was Eren. How is everyone doing? It is the 6th of January. The year is not stopping. It's not stopping for anyone. How is let's check the chat. We have unbiased trader saying hello, Louise, Black Fox, and I saw Paulus as well, or Paulus, depending on how that name is pronounced. How are you doing? By the way, goedemorgen, Paulus. He said that yesterday, so I'll say that to him again. How are you doing?
From the Netherlands, Paulus.
I think I'm not sure. That's what he said. That's how it's supposed to be pronounced. I understood. So, I try my best.
I mean, I don't speak Dutch. I speak Afrikaans, which is, I don't know, like you can think of Dutch as the mother of Afrikaans. So it's similar, but yeah. Yes, he's in Holland. Awesome, Paulus.
And Steve Gipeta as well. That's awesome to have all of you in here. How is the charts, Rich? How is the chart? Are you in any trade? What are we talking about on TA?
So we were looking at sells on GU and EU, and there was a question from Delmain asking, not Delmain, sorry, I was just looking at the name now. From Sahil asking what is the Euro USD on the 4-hour, which I was about to go on to when you arrived. I did mark out a GU sell on the 15-minute, so marked it out. Did not take it though. I did mark it out.
Why not?
For potential. Well, I'll probably send you a message saying why, but I didn't. The whole signal service, I wasn't going to take a trade just so that someone else can copy me.
Who's the father? Do you know the father, Rich? We're looking for the father.
For Afrikaans. Dutch is the mother. The father would then be either Germanic or French or English or Belgian, any one of those, like West Germanic languages, which Afrikaans is a fellow one of it. So yeah,
there is a fellow South African domain here in the chat, and I'm sure many more. Actually, I'm sure I know there are many members who are members of our community and viewers, listeners, viewers, I should say, who are from South Africa. I think we have seen that in our chat for many times. It's Vinny says we most definitely are a signal service. Definitely, I thought so too. I'm gonna be. That's what I've been doing every day, giving out signals, and I was very surprised you guys thought we were not. You were under the impression we were not. Rich,
yeah,
you got to update yourself.
Maybe I'm just wrong. But
Maybe?
Victor, you're doing this for free.
You
How
are.
can you give signal service for free? You should get paid for your signals, mate. I feel like you're going about this the wrong way.
It comes out of generosity. There is no commercial ambition in there because there's no need to.
Oh, you're so good, Victor. Like you're a genuine, just like a heart person. Really, so close.
All jokes aside, of course, we don't give signals. We try to guide you. If you're new to if you have been listening in for some time already, you've been watching us, you know what we've been joking all around. But all along, But we, if you're new to this to the stream, we are opposed to being a signal service, right? We think that's the wrong way
Yeah.
to approach the market. Not only you don't want to do that. I mean, it's for a plethora of reasons you shouldn't be even wanting to have signals from other people. You want to be working on yourself, on your skills, and yes, you want to see feedback. You want to see how examples, and that's what we are. Not signal, but we would try to be a good example for other traders in our process, in our mindset, in our approach, and you can use us as a template. For that, yes, we are. That's a good way to use the exposure you have on the host we offer, or the Fifers offers on our YouTube channel. But talking about the YouTube channel, um, don't forget to hit the like button, subscribe. Yes, if you
Please.
want to have more of our more hosts, we're ever expanding our team. So one way to make sure that we are keep on doing that, we will keep doing that, is by subscribing to the channel and hit the like button. And don't forget also to interact with us. If you have a question, if you're wondering, maybe you have that, I don't know, that deep question, almost philosophical of a trading question, go ahead, test us out, and maybe we will give you an answer. Maybe we will have no idea what you're talking about, but that's fine. Just share it with us, and we will do our best to. I was gonna say entertain, but no, answer, and maybe entertain you
Yeah,
during the
we will
process.
entertain the question, and we will be entertaining in answering that question. I hope so.
Um, I'm not sure, but we'll see. All right. So bottom line is, unbiased trader, a wise person in the chat says, bottom line, will well-known education institute like Oxford, Harvard, LSE. What is London? That's London. London. You know what the abbreviation is?
Yeah, it's the London Stock Exchange.
Oh, I'm sorry. Okay, all right. I should know that. Guide their students not give silver spoon career in on their laps. I think 5% track away their vision. Right there, unbiased. You got the memo. You got the idea. We are. That's exactly what we're trying here to help form independent traders, and the way to do that is to stimulate self growth, self reflection, and it's an everlasting process, just like any other profession. You never stop learning. Trading is no different. School of Economics says, going on. London School of Economics makes a lot of I
Sense.
thought so. London's stock exchange uh, did not rhyme in that line. I thought to myself, but I kept it. But thank you for that, unbiased trader. London School of Economics.
And
I
yet you did.
I
I said it.
beg your pardon.
I say, and yet you didn't challenge me. You were like, "Oh, London Stock Exchange." You should have challenged me. You should have had
I
conviction.
should. I should say well, that doesn't make sense. I mean, it's out of. It's like out of not out of line, but it seems like out of line in that row.
Yeah, it seems
I
impossible.
remember. Yes, but I thought, hey, I didn't know any of the. I didn't have any answer, so I was welcome. You had one answer.
Well, I sometimes it's just thumb sucking. Just grab information from anywhere.
Yeah, yeah. First thing that comes to mind.
Yeah.
All right, I'm gonna readjust my cam, so I'm gonna put it off for like 3 milliseconds. I'll be right back. But I'm not
No.
gone, by the way. I'm not gone. I'm not gone. I'm totally
What is
not
this
gone.
disembodied voice we're hearing?
So having my setup instability right there. No, School of Economics. I remember I some time ago I was visiting London. I was standing in front of that institution. Not very well. It was some time ago. actually. Anyways, what's that's me thinking out loud. Rich,
Yes.
what are you thinking of euro?
Well, I was busy marking it up. We've had, if we go over to the 4 hourly, it's been relatively bearish over the last, what is this, from the 24th of December or so. We have been treading a little bit lower. We started getting a little bit more volume going into January. So the very end, I mean, that makes sense because it's around about the time of, the Christmas markets and whatnot. But we started getting a little bit more of bullish momentum pushing lower. However, from yesterday, we had this very, not bullish momentum, bearish momentum. But yesterday we had a little bit of a, I don't know, it didn't really look like it wanted to go down anymore. We kind of like tested this area down over here on the daily. On the daily, obviously you can see that it was very bullish leading into December, the whole of December, and now we're getting a little bit more bearish order flow. So for me, it is a little bit more bearish overall, even though I think it is a little bit flat in the higher time frame itself. We've come down to an area where previously we had a bit of a downward channel which was broken strongly, and we have this order block down here, which we reacted off very strongly. We created a base off of that a bullish movement, which acted as a let's say a support area for these days over here, which was the December the 17th and then Friday the 19th. And we've come back to it. We've broken through it, just wicked into that last area before, or last area where we broke that downward, short-lived downward channel, reacted very strongly off of it. And then on top of that, we haven't really created a new high. Instead of challenging this previous area and taking the high of the area, we've kind of like just come into this base area and reacting a little bit lower off of it. So I think that there is a potential on the lower time frame for us to potentially go a little bit lower. And the areas that I have marked up, I think was on the 15-minute. Yes, we have a 15-minute base area down here, which I think we can potentially come and test, which is at 116.82, 116.74. But it's just based on the 15-minute bearishness. We've broken the Tokyo low, which had a base area, which was also the low of Friday's New York and London session. So a little bit of a support/resistance area. It's become resistance support, or it was support. It became a resistance point now, but still very much. It's still slowed. It's still a little subdued. I think there is on the lower time frame and on the intraday. I think there's a chance for selling, going down to try and test this base area, which happens to be the low of New York of yesterday. But overall, I'm flat with EU. Like, not all that interested in EU. But you know that I've been focusing almost solely on NASDAQ, so I have really not been looking at EU all that much at all. To be honest with you, I haven't had a look at EU at all before today. So today was the first time that I've had a look at it. But it does seem to me like there is a little bit more, the same as GU, a little bit more bearish momentum in the day, just based on the structure that we've had.
Is NAS setting up for you, or is that too early to call?
No, NAS is doing a very, very ugly,
nasty,
a nasty. It's not bullish or bearish for me at the moment. It's very much sideways, especially over this last period over here. So coming into the new year, Very little volume / momentum for me. Just as we start looking like we're going to make a higher high, it goes a little bit lower, but it's got this like ascending and descending channel simultaneously. So it's making a bit of a flag, but it's waiting for a breakout, and that's what I'm waiting for. So I'm really waiting for the breakout and for a new trend to be established, and then I will trade into that new trend. I got a winning trade yesterday. I took a buy on during the day, which worked quite well. But then I tried a buy during the New York session as well, which just didn't work in my favor. So I got a buy somewhere over here. I can't remember the exact entry point, but it was a 1-to-1. And then I tried a 1-to-2 over here, which was exactly as I expected it to move. It's what I was looking for. I got in on the middle point of that candle. And I unfortunately got knocked out on that one, but that's okay. This was a 0.25% trade. This was 0.5% trade. So I ended up being down 0.25% yesterday. It is what it is. It's exactly what I was looking for. A little bit late in terms of the entry point. But the reaction was pretty much what I wanted to see. So just it's one of those trades where it just didn't work. But overall, today I missed this downward trend, and I don't like buying into like strong downward pushes like this.
You've been burned too many times. You have data; it's not profitable, or it's difficult to catch it.
Yeah. It's more the idea of I want to see a slowed turn. I don't like seeing a sporadic, very strong, momentous move down and then a momentous move in the opposite direction. It's very slowed, very non-existent slowed movement here. Yes, there was the potential for it to say that we have a structure shift of some sort, but where's the swing point? Where's the high point for the structure swing? And it's all the way up over here. On the 5-minute, which is where I trade. There was nothing on the 15-minute either. It's just one big candle. And in general, I would rather sell again from where we are now instead of buying into it. But what I did yesterday was I tried buying into a higher area up over here, thinking, we're probably going to go a little bit more bullish, and it just didn't. So a little bit sideways on NAS at the moment from yesterday. We still haven't broken any significant areas like a previous high or previous low. We swept the Tokyo low. We swept yesterday's New York low. We swept the Tokyo high, but pretty much just sideways at the moment. So I'm sitting on the fence at the moment with NAS.
I can see on a technical level, I can see arguments for both direction, although I think the buy side is more compelling. Looking at the fact that we are kind of at the top of the range and the market is holding up nicely. I mean, there are if you look at the daily and even in the weekly, you will see signs of sell-offs each time we have come. You see how that the acceleration in selling, right? Those big candles, you can see those weekly bearish order blocks being formed as well on NAS, and that's a sign of we've definitely hit that some supply area, but it's holding up. And that's actually a bullish thing when you have the sellers trying and showing that they really are putting in effort and they're failing basically to have follow through. And so that I can see the market finally getting traction on a sell-off, because this would be this is the third time on a weekly time frame that it is pushing downwards, and maybe this time around it will catch some traction, and we will see a deeper correction. But as long as it's holding up after each of these attempts, and you can see the higher lows each time the market tried to sell NAS, that's a very bullish sign. That's an undertone of bullishness that is getting in. And what I see there is actually a breakout, because as long as the market is not getting traction, sooner or later the sellers will kind of, be empty on ammo, and then it's the on the buy side will, push forward and totally break out. That's my guess. Obviously, you will have to wait for the market to actually do what it seems to wanting to do, but hasn't done yet.
Yeah, so it's the waiting game now, and I think that is one of the more important things about trading is knowing when not to trade. And for me, today is one of those days where it's just not setting up the way that I want or need for it to follow my plan, and I'll just be sitting on my hands until it starts doing what I want it to do.
Sure.
Yash
way-
Yang asking why Victor wears a mask, because he's Batman.
We have that question every other stream, if not every. But that's fine. That is totally fine. One way to trade such a price action where you have the market being compressed into an apex is to, take advance on the possible breakout or breakdown, and take it on. I'm going to show my charts for those who are wondering,
Oh yeah.
how they should be. That's fine. I'll do it in a few seconds. If let me double check that. Yes, I think I can. Remy, thank you for not putting my screen yet because I wasn't ready. One of the ways to trade a um, converging ranges like this is to take an advance on the possible breakout. We don't know that in advance. It's a game of probability, but you can use it without having any emotions to it, any attachment to it, by selling each time it reaches the resistance level in anticipation of a possible breakout later on, without knowing, right? So anytime it comes back, for example, on this time around, there isn't a lot of space left. So the third one would have been the best way. You had to create a trend line. On the third one, you can start selling it off, and you could on the daily time frame, sell this in the anticipation that of a possible breakout later on, which may or may not happen, but you get in already on that trade. And you can do that on both sides, right? It's kind of a hedge, and one will win and the other one will have a high risk reward, likely to have a high risk reward ratio, because of course you have that compression, that price coming back into the apex, and you can put it above the previous high would be a nice area to do that, and anticipate on a possible a possible breakdown, and you do the same on both sides, right? It looks weird because you think, well, why am I going long and short if I have an idea? And yes, maybe you do have an idea, but you can, because of the explosive nature of these breakouts or breakdown, it can be profitable just by taking both sides, and then let the market do its thing, and it will eventually put it below the previous swing low, and have a something that makes sense. At least it has to be more than a 1 to 2, because you are already risking two, each on one on each side, and both of them need to be at least 1 to 2 just to break even. But you can understand, if you go to another time frame, you can find other swing points, maybe that reaction point, or perhaps even this could be a nice area to be targeting. And on the buy side, you can understand it's a new year, new hopes, and the equities, could easily rally, continue the rally they've had so far, a couple of percentages higher, and you'd be nicely in profit on that as well.
That is, some people might, that is very risky. It is risky, yes. You are hedging, yes, but it's mathematical. So there's a statistical nature to it. Like you said, make sure that if you were to decide to do something like this, that your reward at least is more than 2x your risk, because you're already risking 2. So in order for this to statistically work out, there's a 50% chance it's going to either break out towards the top or it's going to break out towards the bottom. theoretically. So you're kind of saying, I'm hedging on the fact that it's going to break out, which is what my assumption is. I don't need to know in which direction it is because I'm technically going to be taking either one of the two. The one, let's say in this case it breaks out to the top. The one that you had your entry for a sell would become, it will trigger normally, and you will lose one off. But your buy trade is going to carry that loss and continue building up on that idea. And the inverse is exactly the same. So it's a game of statistics. It's a game of numbers. So it seems risky, but it's definitely something that is viable. And I'm pretty sure you're allowed to do that.
Yes, you are. Yes, you're totally allowed to do that. There's some hedging within one account. Hedging within one account is totally permissible. Not only that, it's actually it's sometimes it is the responsible thing to do. Hedge your position, and that's what you do within one account. We have to make that distinction because if you're doing it through using different account, that's not allowed because those then you're taking advantage of you're gamifying in that. That's not fair.
So cross accounts is not allowed because you're doubling the risk basically. If you're doing it on one account, that account itself has its risk controlled. Where if you're doing it over two accounts, you're putting two accounts at risk, which doubles the amount of risk that you have because both accounts can then, one is going to win and one's going to lose. But if you're doing it on one account and you're managing it properly, then the one trade will win and the other trade will lose, but it's still the same account. So.
Yes, and there's what I've drawn here is where as long as it is within the two horizontal orange lines, you're basically at risk, and whenever it breaks out of these lines, you're no longer hedged, and you actually have a directional exposure. Meaning, but that's likely to happen. I mean, when you have a conversion like that, the most likely thing, it's unlikely that the pattern, the formation will not have a consequence later on. It will, because it's a reflection of market participant, right? They're coming in, converging. That means that they're waiting for direction, they're waiting for information, they're waiting for something on the real world, the geopolitical arena, perhaps, or maybe fiscal policy, or whatever it is that they're waiting for. And whenever that which they were waiting for is out there, they will then have clarity to go up or down, and you don't have to figure out which direction. You just understand that there's going to be a new direction, likely to be up, to be fair. But I like having these probabilistic traits, just like the one that I indicated here. All right, so.
I like this idea of yours, Victor. I probably won't enforce it because it's so far outside of my trading style, but it's definitely worth taking into consideration, and it's definitely worth just testing as well. There's nothing wrong with testing a theory, and then if it proves correct and it proves, easy for you to see it in the moment and for you to follow, then by all means implement.
Yeah, I think that's the whole purpose, right? Getting exposure to other kinds of approaches here on the stream, and then testing it out, for sure. Testing out. Actually, I don't want you to trading this if you're watching this from home just because someone said it, even if it's me. I mean, you shouldn't take my word for it. Test it. There's nothing. You shouldn't be trading anything without testing it first. That's my mentality. That's what a gambler would do, right? Just let's wing it, let's try it. I feel lucky today. Trading isn't about that, right? Trading is about taking educated risk and quantified risk, and not winging it.
Yeah, but based on empirical evidence, or at least back-testable data, not just on a whim or because someone said so. On that,
and we have Harsh Patel, and you're gonna love and leave us, Rich.
Yes, I am. How did you know?
We've been streaming often enough that I can read your mind already.
Am I that predictable?
I wouldn't say predictable. I would say
Expected. It's expected of me.
readable. I would say readable.
Oh, oh no, that's horrible. I have a terrible poker face. Then I must be terrible at poker.
Maybe we should play poker soon.
Well, I've got a poker game every Friday night with our community, and LJ is there, and we're trying to get more people to come and just play with us. So you're more than welcome.
Friday night.
Yeah, every Friday night. I host.
I
I'm
will
I'm the poker host.
I will be maybe I will join in a not too distant future. I was gonna say in a not too distant galaxy, but that's a different storyline.
That's Star Wars.
Rich, thank you very, very much for being here, being such a nice guy as always, guy, and sharing your ideas on NAS and all the other charts and assets you've been talking about, and being such a good sport on in general. I appreciate your presence, your existence in this world, Rich. Thank you for being who you are.
My existence. I don't think anybody's ever told me thank you for existing. That's a new one.
Well, there's always
I
there's
think I might just. I actually have this warm,
there,
fuzzy feeling inside of me now. I don't know what to do with it. Thanks, Victor, for the kind words. I really appreciate. I haven't had the opportunity to say Happy New Year. Happy New Year to you. I hope that this year for you is just all-time highs, equity highs, and that you're happy. I just hope that you're happy. That's what I
wow,
hope for you.
that's a very, very nice and warming wish. I wish you the same.
Oh, that's boring. Don't wish me the same thing. Wish me hardship. Then I can at least try and just like no, I refuse. Anyway, guys, everybody in chat, thank you very much for having me. If you haven't already, please drop us a like and a subscribe. It really helps. It gets this kind of information out to more people. And we are doing this. Well, the Fivers is doing it for free. So just join. Like, subscribe, share. Anyway, Richard out.
Yes, Richard, you were gonna say, don't be unfair. This is for free, so you have to do something back. I'm just kidding. Rich is such a nice guy. He would never say that. Only jokingly. All right, we have a couple of questions in the chat. So let's take a look at them. Guys, Richard, I saw Happy New Year to you as well. Patel, the question for this year. Wow, you're allowed to have more than one question per year, Patel. Don't worry. You can. Each stream you're allowed to have at least a question, so don't be afraid to ask another one in 2026. All right, I have never traded forex pairs before. I don't maybe because of less understanding. Why is forex pair important for? Let me double check. There's a second part of that question. Where is it important for most of our trader friends here? I would like to understand advantages, disadvantages of trading forex pairs. Patel, great question. Great question. You're asking a forex trader to tell you its a benefit, and that's easy. That's easy. One of the things is it's the opening hours. There's a lot more. The trading hours of the session of the forex pair is longer. Even though nowadays you have CFDs that you can trade, NAS and equities and other assets 2024 5 as well. Forex is actually the market is actually open. It's decentralized, but the main benefits are, I would say, yes. There's a little bit of for everything, right? You have the Asian session, you have the London session, the New York session, and if you're each session has its own character, and I like that. And in the case of other pairs, that since forex is the whole day, you can pick and choose which one is better for your strategy, better for your personality. The other option, or not the other option, but the other advantage as well, is that there are many pairs, so you can pick and choose, having different flavors, so to speak, that matches your strategy and matches your personality better. I would say those two are the main benefits. The other thing is, there's if you compare it to equities, you haven't mentioned what you trade, but if you compare it to equities, forex pairs tend to be more rangy. Maybe not on a lower time frame, but they are certainly, if you look at from a little bit of a higher time frame, rangy. So there are certain strategies that are particularly profitable in the forex market. Mean reversion, for example, on lower time frames as well, but especially higher time frames, because of that characteristic of not being too trendy, doesn't have a positive drift like equity has, which goes up and up and up because of inflation and other reasons that forex doesn't have, because it's the comparison of two currency pairs, completely different than equities in that sense. Hopefully that helps you. The other reason I would say is, let me think of another benefit. Yeah, I would think the sessions which I mentioned earlier, for the equities, the New York um, hours is the period to be trading it. But what if you're trading? What if you All right, I let me know in the chat if you guys can see me, because I think I lost connection for a couple of seconds there. Let me know in the chat. Could you let us know that we have you have visual, just to make sure that I'm not talking alone here. Let me know in the chat. Please don't let me. Uh, just let me know. All right, so checking. Let me double check here on. Checking here in the background if everything is running fine. Maybe I should open up YouTube and just make sure for myself that the 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 stream is being visible, is visible and being seen by everyone live. These things happen as we are. All right, so perfect, got that. All right, let's continue. All good. Thank you. Thank you for that. Cabanese and Sigma, FX, RMM, all as well. Perfect. All right, let's continue. There's a little delay between when you guys type something in the chat and when, or actually when you chat, when you post a message, there isn't much of a delay. The delay is more when I say something, it takes about 10 to 20 seconds or maybe even longer for you to actually see it on YouTube. It is live, but with a bit of a delay. That's how it works. So no problem. Let's continue. So um, let me check the questions if there's any left that I might have missed. Yes. Okay. All right. I'm up to speed with the chat. So let's continue with EU. What do you guys say? EU, dollar, pound. What is it that you guys want me to look at? Maybe Bitcoin. Bitcoin has been having some reaction. Maybe let me know in the chat which of the four, or maybe some other pair you would like me to look at. Just let me know. There's that. That's that's Bitcoin. That's the supply zone that I indicated before on the higher time frames, and you can see how the market reacted off of that order block. Came in, has a nice reaction, and seems now to be, right there. Basically, is trying to break out of it and have a sort of a reaction or a reversal, I should say, into higher levels. All right, so let's. We have how many likes do we have right now? We have around, not around, 175 according to what I see here. That's nice. I think we can do more. I think we can at least reach 200 in the next an hour and 15 minutes. That's the time we have left on our stream. So let's try and gold. Steven Chipeta says try gold. Let's check gold. Grazab is also gold. Kartik Yadav says EU. So we will be taking those. We'll be taking a look at those two. Um, Perfect. Let's take a look. But let's start with gold, right? Let's start with a different pair today compared to what we normally go for. All right. So on gold. So what do we see on gold? Let's take a look on the higher time frame. Just good practice, starting from the highest tradable uh, uh, time frame. The monthly does not have anything that I would be interested in trading other than this supply area right here, not supply, demand area right here, which has not been retested already for 5 candles, and soon it will be not fresh anymore. But that's the only thing for me to be trading. There isn't really a lot more to. There isn't anything more to be looking at gold and this time frame besides seeing that it's very very bullish. Gold is in the weekly time frame we have a first indication of some bearishness coming to the market, but it's too early, it's too little and too early to say anything yet. We have a weekly bearish order block that was created. That is the first one in a very long time. We'll have to go all the way back to August for the same selling pressure coming to the market and creating those bearish structures. So that's something you will want to be looking at. Maybe there's a second part, a second leg to that bearishness. Maybe there is going to be, maybe that's the indication, the initial indication of a possible temporary top being placed in the next couple of days, perhaps a few weeks. Where this could be squeezed and eventually coming back to some demand area. That wouldn't really break the trend on gold, but that's something I'm taking into consideration because simply it wouldn't be, it's simply healthy not only on the fact that we are at the end of a bullish leg, but if you compare that to the other expansion as well we have had, this expansion is ripe for a little bit of a retrace. We did have a pullback in November, at the beginning of November, in October I should say, from October to November, but that wasn't very significant, and maybe it would be healthy from a technical perspective to have a sort of a healthy correction, and then we can safely continue for higher levels. Well, that's just speculation on my side, of course. On the technical, the only thing we have is a bearish order block on the weekly. Let's take a look at the daily to see if there's something boiling up for a deeper correction. And what do we see? We have no quasis, no bearish quasis. This is the structural low, or the neckline for the daily time frame. This is the left shoulder. That's the head, of course, and we haven't broken this line. So whatever reaction we have, unless it breaks this neckline, should be considered as just a pullback in an uptrend, right? Once we break this level, then we can think, all right, maybe the market is signaling us that it wants to go lower. Obviously, I would want price to come back to get my entry. What I mean is, let's say the market does go lower. Um, That to me is an indication that the market is getting ready for much lower levels because it's breaking structure. But I would wait for the market to come back to some area of supply and then take the short, because that's how I trade. The daily time frame is holding up quite nicely. I must say the market reacting on that demand zone, tapped it once on the second time. That's where it buyers are came back to the market. Other than that, we had the break of a bearish structure. Right, that's the bearish daily order block right there. Market did not come back. Didn't need anything. Um, for gold, we were talking about this neckline on Monday, yesterday, and there is that neckline that whenever price is, that's the breakout line for on the lower time frames. Whenever price is above that, it will be a sign of strength and more buyers. The longer it stays there, the stronger the market would look. And that's exactly what happened here. Look at market broke, came back, retested initially, had a second retest. This is where when we were talking about it, and then the market recovered and continued nicely to higher level. Um, the daily time frame. Do we have anything else? There is this as the next structure or the next level of relevance. We had the market creating or retesting, not creating, retesting the daily order block below, which is the one I'm indicating right here, and it's leaving a daily order block, and it is most realistic or most reasonable to expect that the market will need something on the daily time frame or above to change direction. So once we have this reversal, it's reasonable to expect the price maybe directly or maybe with some ups and downs in the middle, multiple legs, I should say. Um, but eventually, we expect price to be reaching, or it's reasonable to expect price to be reaching the next order block in the opposite direction, but in the same time frame or higher time frame, and that's above us. So there's plenty of room for this push up that we're seeing here. That's on a daily time frame. That creates that sets up the for whatever. If we do get a long signal on intraday, you can use this as a possible. Let me use the other template as a possible target to be considered, right there, because we understand that the market moves from one level to the next level, and that's the next level we have on the buy side. That's the next level that we're going to be reaching. That's a supply area above us. All right, so that sets one thing up. On the H4, there has been a reversal, and price did come back, as you can see here, using that order block, that entry order block for that push out. The only thing is that it didn't do it in a way that I would be able to participate, because the sequence is first it breaks the neckline and then comes for that entry order block, meaning this. Right, so this would be the left shoulder, the neckline, the head, and the sequence is to break this first, right, indicating price wants to reverse, and then come to the entry order block on that time frame. And in this occasion, right, sometimes the market, a lot of the times the market gives you the neckline before breaking out. Other times it does not, like this one, right? Sometimes the market just doesn't follow the usual path. In this case, it didn't trigger me. Otherwise, I would be sitting here for a possible entry on the reversal. Didn't happen. Reason why I wasn't triggered. Who knows if I would be available to trade the trade since I'm traveling. But I mean, just on the structure, I mean, I wouldn't be triggered. The H4 order block, we are seeing there is let me double check here. That is, yes. So we do have a entry, not an entry, an outside bar on H4. That's very interesting, actually. So that means that this wick is when already happened. I know. Um, in the direction of what we understand what the market wants to do is reach the level above us, meaning we're having a long bias here on this asset on gold. looking at the outside bar after the breakout. This is the breakout, right? So we talked about that has the initial retest, actually has a deeper, more significant retest of the breakout line, which is that line to the left that starts from the left and then moves out, right? So that's a clean breakout right there. You should, that already on its own should be a reason for you to be looking for a long. We also have on the daily, the sequence on the daily, that it's leaving a daily order block and likely to be needing to be going to the next structure in the same time frame, which is above us. That's a second reason to go long. It seems like it's closer to the target than where the breakout happened, so it may not. You need to be careful with your with this trade, because it has in comparison has more distance for a more space for a correction than reaching the target, making it a little bit difficult for the risk reward ratio for a trade taken on this pair. But you can still move to the lower time frame and pinpoint and refine your entry. So that would be the area. Let's take a look at if there was. Well, you can see the it's wider than the H4, but there is overlap. And actually this on the H1, it never came back, and it was it fresh? Yes, actually it was. So let me double check here. We do have an H2, which would have been able to be used for an overlap. I personally don't like when the overlap is wider than the H4, right? The H2 being a smaller time frame needs to be refining the H4, not the other way around, right? So that's something that's a characteristic of the setup that I like a little bit less. But if it still checks all the boxes on the other, then I would be let's take a look on the 15 minute, I mean, not the second. There wasn't a quasi. I remember now. Yes, there wasn't a quasi in here on the 15 and lower time frame. So basically, the only way you could be catching this would be if you found a reversal pattern as the market came back to the overlap of the H4 and the H1. This happened earlier on London session. Let's take a look if there was a quasi. I already see that it wasn't on the 5, maybe on the 1 minute. Let's take a look if it's set up. I didn't trade it because I'm another part of the world where 11 o'clock London. I'm still asleep, so I wouldn't be able to have caught this. Let's take a look. Right, so this is the neckline on 1 minute, and the head, left shoulder, neckline. And let's see if it came back within a certain number of. Let me check here. Actually, this would be the entry. Actually, there's another order block here, and that's your entry. Beautiful entry. Right, so you have the left shoulder, the established downtrend, left shoulder, the head, the neckline. It goes out and pushes through all the way, creating that range from head to the bottom, although it's upside down because it's a bearish reversal. At the top would be a better description for that point. And once you have that quasi, so it already happened, moves away from it, and then comes back to retest the order block, which is within the 15, which is still valid. The 50. Actually, I need to move this because I think it is not all of it is valid. So this would be, yes, it is valid. Look at a midpoint. Right, that's a borderline valid, but it is valid. Look at that midpoint of the entry order block being right in the middle and just a tid below the 50% retracement. So that would be the entry, and putting your your stop wherever you want, whether below the head or a little bit more tight, and you target the next relevant level on the H1, H4, or in this case, let me check. In this case, would be, well, it depends. You could even expand it to target the daily reason. Do we have a daily reason? No, we don't have a daily reason, so I wouldn't be able to target that. But the other way to target is using ATR, which is on the daily time frame. It's 85, and from the low of that day, 85 would easily target that. So initially, what I would do is I didn't trade this, right? As I said, I was asleep, but initially the target would be uh, the ultimate target would be above, not above, below the daily order block, somewhere there. You be the guess what you think is adequate, and target the whole thing right there. That would be my way of approaching this, and there. So giving you a 1 to 11 uh, for that trade. And yes, a wise thing to do is, if you're not accustomed to trading high risk reward trades, then perhaps you can put TP1 before the previous swing high, recent swing high, because that's a wise thing to do. And if you're not accustomed to taking high risk reward ratio, you may be triggered in it because it has um, a low win rate, right? So what you could do is have 50% of your trade being a little bit before that swing high that we had on earlier today, and let the rest run for the actual ultimate high. That would be my trade. It already happened. I can't, that's it is what it is. And I wouldn't be buying anywhere else, because that's where the H4 is. And well, there's maybe a new fresh order block that was being created, but it might come back and then push out of that because of this order block that could be created in about an hour or so. But we'll see. That was a nice trade, by the way. Didn't take it, but that would have been a nice trade if taken. Let's go back to the chat. So that's gold. Hopefully that's helpful. Breaking it down all the way from the monthly to the 1 minute. Let's take a look at the chat. As I said, perfect. All right, so we will be looking at probably EU in a short while, after me catching up with the chat. Right. Okay, so we have 182 out of the 200 likes. 18 likes more to go. Come on, guys. I know you can do it. I believe in you. I know you can do it. Right? If you think it's helpful for traders all around the world to be able to see someone live, break the market, talk about it, interact with you, because that's what we do, right? We're free. We're available for you to interact with us, ask us any question you want, as long as it's trading related. We will do our best to answer. If you think that having that opportunity is helpful, then even if maybe for you, you're on a different level on your trading career, where you know what you should be doing, um, even then, hit the like button, subscribe to the channel if if you're not a subscriber yet, because we are on a mission to reach the next milestone, which is 100K. 100K, we're very close. I think we're at 93.8, I think, the last time I checked. So it shouldn't take long, but you can accelerate that process of us hitting that milestone. Actually, it's you as well, right? It's a collective effort, because actually it is, everything we do is because you guys allow us to do that. You with this, it is with your support. All right, let's take a look at EU. If there's anything, I also want to take a look at dollar cat. We have been talking about that for some time, and we will be checking out. Okay, so the market has moved away from the area. This is the you know the area I've been spotting and waiting for price to reach. It has broken a neckline here, so this is getting interesting. I would rather have that happening after it hit that level, so we can still trade that, just not using the daily quasi and the weekly and the monthly and all of that beautiful. Actually, we can. Actually, we can. This is not the only entry. So let me mark this as I should, which is the daily order block, daily neckline. For those who are not sure what I'm talking about and it may seem gibberish, it's not. That's not in my head. All right, so you have a monthly fresh order block being retested, which is this fellow right here, which sits on atop another supply area, not supply, demand area, where which isn't fresh anymore, right? This was the first retest. This is the second retest. So we're not interested in this demand zone. We are interested in the second one. But the fact that it is on top of the first one tells us that there is a sequence going on where price is getting ready for a more extended move. Likely, we don't know that, but it's likely. And based on this order block, the projected TP on based on the monthly structure is this level. You can see what kind of I think this is like 800 pips or so. Even if you get it later on, okay, 500, not 800. That might have been a different pair, but still 500 pips. If you can catch, a fraction of that, half of that, is already gigantic. So that's on the monthly time frame. That's the monthly signal that we're looking for. The signal will likely take the confirmation of the signal will likely come, months ahead, or months in. It will take months to actually materialize, and by then you should be already in the trade, right? So you don't wait for the monthly to give you the signal. You get in before that, way before that. The weekly time frame, we have a weekly quasi. This is the reason I am interested in this trade. You have a weekly quasi right here. You can see that's the neckline, goes all the way up here and it comes back to the head, the entry order block that is based on the head right there. See that? And it's so basically this quasi is already at play. The quasi, the target for that quasi is here, right? But since it's a high time frame, it's quite difficult for most people if you're on a trading prop firm account to be holding this position for so long. Probably hit your targets way before it even hits half or quarter of this distance. So targeting something a bit more reasonable in terms of holding time is better. So we have a activated quasi to the left, and the market. Let's take a look, and the market does it again. So there's another quasi coming from right here to there, and it breaks the neckline right there. And what does it do? It goes back. See the sequence? Goes back to the entry order block that was left on the weekly time frame, and is likely, we don't know the future, but is likely to be getting ready either for the reversal right away, or maybe for a deeper push and then the reversal. Who knows, right? So in those are the scenarios for a possible reversal, and there are so many things, right? The monthly monthly demand zones being on top of each other, being respected, both of them, and the weekly quasis being created, one after another, and all of them working beautifully on one of the entry order blocks. So if we go to the daily, there's also a daily order block right here, which is based on the quasi. As you can see, I'm piling on reasons to go long this pair. This would be the, let me see, this will be the neckline right there. That's the head, the left shoulder. Price goes all the way up here, and comes back to maybe this entry order block before switching direction, and most likely going to the top of this quasi, which is that macro target. I think macro target is a great place to be targeting for, prop firm accounts. Even this macro target will take many days, because this is the daily time frame to reach this. Likely be longer than a week, possibly a few weeks before getting there. Although I must say, when you have these quasis that, even though they take, dozens, almost 100, sometimes 80, sometimes over 100 bars to be created, it seems like magic. But once you get the reversal happening, this move can happen quite quickly. Even though the whole pattern took many candles to form, you will see it go from the entry order block to your target, or to some target in the middle, relatively very fast. Meaning, it could happen in, let's say, only 10 days or so, in comparison to the rest of the time it took to form the pattern. That is definitely very fast. All right, so you have I would like to see price come back to this order block, because then we have an extra reason for this price to work, and you can this setup to work, and you can target the target we have here. If we if you if we don't have if price hasn't reached this yet, then I will not be able to target this, right? So, because I understand that this target is dependent on the bigger pattern, which is only triggered from this order block. Okay, so we can still trade if we have a daily quasi, which we already have here. We'll go into that, but we'll have to target perhaps this level, right? Or even the top that was made in between. Understanding where in the maturity, right? How mature the pattern is helps you set realistic and reasonable targets. And waiting for the market to actually reach the levels of relevance allows you to actually target reasonably at the top of the range, but only after it reaches the level. If this isn't at play, then you shouldn't be targeting the macro target yet. So it's understanding the phases of maturity of the pattern that I think is quite important for everyone. All right, so for every trader. All right, so we do have a daily order block here. Let me mark it so you guys know. There's plenty of reasons to go long here, but you got to know where you are. That's the quasi on the daily time frame right there, and we did activate the quasi with this wick. We'll have to wait for price to come back to where that entry order block. Actually, it's no longer a regular daily structure. It is a entry order block on the quasi right there. All right, so I would be waiting for price to come back. Let's check if there's another structure. There isn't. Okay, so I will be waiting for price to come back to this level, and to have this move, possibly this move, actually to the high of the target, the high of the structure. That would be the most sensible place to be looking for the target. That would be not a macro target, but just a regular TP to be used. And I'll leave the macro target for the level below us, which has not been triggered yet. So basically, this is one setup for a swing trader waiting for price to come back into this order, in this entry order block on the quasi, and then going to the lower time frame, maybe the H4, H1, to get your entry, or maybe, who knows, even lower time frames. And we have plenty of structures to help you with that on the lower time frames, all of them needing to be within, or having touched after price has touched the daily order block, because that's what we want to be using for our setup. And you can already see that we have, let me mark this. Actually, the neckline is already in here. Not the neckline, the fib. Let's see if the H4 is able to be used. H4 One, let's see if the pattern is still valid in terms of size, because if it gets too big, then it no longer is valid. So there is an entry order block on the H4, and this is the next level. Okay, yeah, so this is the second one, and with this setup as well, we have two entry order blocks, right? And they seem to be covering the whole area or a big chunk of the area. But the way to trade this is only if the market comes and touches the daily structure, you can use the daily structure. If it only comes back and reverses right from the H4 order block, then you need to listen up and only trade that structure, which is on the H4. Since the quasi is also visible and valid in the H4, you're still allowed to target this from this level. It's not using the daily. Actually, I like this a little bit better because it will, open the possibility of price reaching this later on. So I'll have to check. Actually, I'm gonna mark. I'll put an alert there because I want to be trading it when it hits it. I want to be aware of that. You can see I already have a couple of alerts to be trading here. That's H1. So yes, we have multiple structures that I'm interested in. This is on the H1, but let me check if the H1 would is still tradable. I think not, to be fair. So this would be 1, 2, and 3, 4. So basically, nope, I can. The H1 falls off as a possible reason to get into the trade. H4. Actually, I'm. Let me double check this properly because I was doing it on the H4 while it was an H1 structure. Doing a live setup checking here. So that's 1. Yes. And there is no overlap, so we're going to leave it there. There is another one here. This one is not gone, so that would be the H2. And I already know, not the H2, H1, I already know that there is too many structures. So that means, as expected, the H1 is no longer, the quasi is too big for an H1 entry. Let's check H2. So you got, let's count them. Got 1 here. Does it have overlap? It does. So let's extend it. All right, so that's 1. It's as big as the H4, which is not ideal, but it is what it is. The low on this candle is 36.84.5, and the close is 30.83.5. So that means that there's nothing there, but there is all right, so there is an entry order block here, right there on H2, and this can be expanded as well, I think. Let me check. No, it cannot. Okay, so there it is. You got 3 structures. It sounds weird, or it looks weird because they're so close to each other, but that will help you in your stop loss setting, right? Because you can put the stop loss below each level. Meaning, if you get a trade from this structure, you can then put your stop below the structure, until it reaches this level as well. Then you would have to, your other entry will have something like this, and at the last opportunity, it would be below the area. Meaning, all the time you're trying to keep your stop loss as tight, but still sensible, right? As tight. So going and putting it all the way to the end right away, right? You're using each structure on H2 to do that. So I'm going to be targeting, I'm going to mark the areas. There's plenty of areas. There's actually 3 to be traded. The first one I do not like as much because it's not refining anything. The second one, same thing. It's not really refining. So that's not ideal for your tight entries. And this is like so. Okay, so these are the areas to be traded and putting your stops below them. At least that's how I trade. And the last one is this one. I know it's quite crowded, but it works well when you have, let me take that away. These are the 3 areas of interest that I have on this pair. That's one. Let me take that away. One, right? And the second one and the third one. I like the third one better because it has the daily and it's tighter, so I can get in with a tight stop loss as the market now. So let me move this alert to make sense, right there. Want to be alerted right before the market reaches the level. All right. All right, so let's put this a little bit tighter. Doesn't really matter, but let's do it. Anyways, okay, so these are the areas that I would be looking for price to come back. If it comes back, it may not be the case, and if that happens, then there's nothing to do. I would just be waiting patiently for the market to come to this area, and then taking the long, the trade, the buy here for initially this target or whatever high it put in before, right? Of course, not entering blindly. We need to find reasons on the lower time frame as well. You can trade on the H1 only and waiting for the reaction and then get in as you see the market really bouncing off of something from a structure. But what I do, I go to the minutes to get my sharp entries, right? Where I can get stops as low as 2 pips, 3 pips, 4, and so on. So you can understand these trades they have a low win rate, right? Quite low, in the 30s. But the risk reward ratio is way more than 1 to 3, right? You already saw on gold, the idea was 1 to 11, the ultimate target, not the whole, not including the TP1. So you can understand that if the win rate is around 30, that's, you need a risk reward ratio at least 1 to 3 to make it worth it. And having something that's much more than that tells you an idea of how profitable this can be if you traded it correctly, if you know your numbers, your metrics on this setup. All right, so we have Pip Tracker asking here, with oil buying so much because of this Venezuela drama, shouldn't we looking to be selling USD CAD? Let's wait for technicals to align with the fundamentals. Um, I understand. I totally understand your point. But sure, I can totally see, and actually, it's a very good thing to wait for multiple things, meaning using fundamentals and technicals to to align to take your trades. However, I personally do not use fundamentals as an input to my setup. So even though I may have an opinion and I may agree with you in on the fundamental basis, um, the thing with fundamentals is that it's the timing. It's the rationale behind these ideas, these fundamental driven ideas may come out into play, months later. By then, perhaps, we reach our target on the technical level is long gone. And so sometimes, a lot of times, um, you know, unless you have data and you can pinpoint the timing, you can define the timing, you know, precisely, it's kind of difficult, right? So I understand your point, and what you would be doing here is waiting for the market to actually break these bullish demand zone, or demand zone, and then, because that would be alignment, will have that would be aligned with your fundamental point of view. That's sound advice. I totally agree with you, Pip Tracker. However, I don't use it. I don't use it as an input. And what I've seen is that you can do just fine without the fundamentals aligning with you. I find it tricky, um, because of what I said, because of the timing. Find it tricky to wait for, you know, I've seen many times where the fundamentals are also the other thing about fundamentals is that, the ideas we get are are based on the information we have, right? The fundamental views, whether or not what's going to happen to Venezuela or some other oil exporting country, is based on the information you have, right? So the quality of the analysis is as good as the information fed. And that's where part of the problem is, because, yeah, I'm not going to go into a rant into the objectivity of news agencies, but sometimes news that comes out, the information we use to build our case on fundamental insight, may be incomplete, to say the least. Other times it is biased, and other times it's deadly wrong. It's just, they may have a different agenda to get this news out, this narrative out, which may or may not be based on facts all the time, right? Maybe because there is interest in maybe one party to give out a signal, and so they, not going to. I mean, it's common knowledge that news agencies sometimes are, guided, so to speak, to say it softly, by external agencies into giving more exposure or less exposure, depending on what is in the interest of, governments, or interest groups, industries, leaders, and lobbyists, and things like that. I know it sounds weird because it shouldn't be like that. That's not objective journalism, but that's the reality of life. I mean, I'm not don't shoot the messenger. I'm just explaining the reality of our worlds. So, given that these facts, for example, when you mentioned Venezuela, and the um, we have to understand that, for example, this in this occasion, right, we have, yes, there's some things that happen, some, well, I wouldn't call them incidents, but marking pivotal points on the on that, in that country, that happened not long ago, that will have a marked, a complete different outcome for the future for this country, right? For Venezuela, and meaning for also for oil production, and the whole industry, basically, right? If Venezuela starts producing again, that will change uh, the supply for sure, and that would be, bullish for the industry, if you're, trading the stocks that would be investing in that country, but perhaps would be creating more supply, and that could be, have all these different effects on oil. But for example, these changes, according to experts, are going to take, like a decade before they come into play, right? So any new oil coming from Venezuela will take maybe 10 years before Venezuela has the expertise, which they they do no longer have for the last, what, 20 plus years in house to extract the heavy oil, because Venezuela has a heavy oil in comparison to the light oil other countries have. And so it's a little bit more there's a lot more layers into this. And when you think of all of that, there's the news, the narrative that is now up front and central on everyone's retina about oil perhaps coming to the market from Venezuela. But the reality is it's going to take like 70 billion to prep the industry up, bring it up to speed for oil production. It's uncertain exactly what's really going to happen, and it's going to take, experts say, at least 10 years for any new oil coming from this change to hit the market. So you understand that the timing on that fundamental narrative is completely um, different from our technical levels and quasis that are these levels are to be hit if price comes back. This would be reasonable to expect price comes here within, I don't know, by January, as we can see, maybe later on, could be later on in January. And then the target, this could happen, just to give you an example, this could happen, who knows, something like that. That would be reasonable, right? We're talking about everything happening within 1 month. You see my point? So um, both of these things can happen, right? So the technicals can give you the reversal, and they might hit target. Maybe they will not within a month, 2 months. While the fundamental narrative that possibly in 10 years, Venezuelan oil will hit the market, will still be true. And so that's the difficulty I find, to marry a fundamental view with technicals and waiting for the alignment, as you speak, because one thing, you could be waiting for years for that to happen, as in the case with Venezuelan oil. All right. Thank you for that, Pip Tracker. Thank you for that comment, by the way. Very sharp. I like that. I like that when you challenge uh, ideas, or you bring ideas to the table. That means that you're actively listening, and that's exactly what we want from each of you, or at least the most of for as many as possible, for you to be actively listening and contributing to the discussion. Pip Tracker, thank you for that sharp point. All right, let's go back to Sniper. Says he agrees as well about the fundamentals and the technicals, and it's not about being right or being wrong, right? It's just being the main thing is putting things into perspective, understanding what is technicals good for, and what is fundamental good for, and when to how to use it. Fundamentals can be very, very strong basis for trades. Don't get me wrong. As long as there is the for example, election, right? You have a predetermined date where a result comes out, even though they have to be ratified or confirmed, and it may take days. There may be a second round and things like that. But you understand my point. It's very defined. Where, for example, the Brexit, right? That was a specific date of where fundamentals come to play, and you can use that to uh, uh, to your advantage, and look for technicals to align, before, during, and after that date. But that's a specific date where you can harness the power of the fundamentals. In the Venezuelan, um, maybe I'm lacking knowledge on the topic, but I don't see a very that's a different case. There's no specific date of which we can use the fundamentals, which may or may not happen in 10 years, and maybe shorter, 7 years, or longer. But that's still way, way longer. In the meantime, we could be in a very different level on the dollar cat. All right, let's move on. um let's take a look at and also, remember, this setup, um maybe it's not something to marry. If the market just goes up, goes down and breaks these structures, you just don't trade it. It's, everything is off table, and you just continue looking for another pair or another setup somewhere else, or maybe when the market hits this level later on. So all right, so let's move to EU. What do you guys say? Gonna go check the how many likes do we have? Rami, can you give us an update on the number of likes, so we see how our viewers are doing? What's their performance? Let's see their return on their effort. Okay, so another let me go check here. Okay, so on EU, let's go from a higher time frame. I'll try to do it quickly because I do start from the monthly very often, actually as often as I can, because I think it's crucial that everyone gets it ingrained to always start from these higher time frames and use them to their advantage, because that's how the market moved from the higher time frames structures and then to the lower time frames in terms of priority. We have a bearish trend on EU for on if you zoom out the monthly time frame, but within this range we have a bearish quasi. This is the left shoulder, the head, the neckline. It breaks it and creates a right shoulder and goes all the way to the TP of the structure very nicely, but it actually expands it and it comes back for a possible second right shoulder. Okay, so that's where we are in terms of the the super macro time frame. And let's get here. All right, so that's where we are. The bigger structure left us with 1 and 2 entry order blocks bearish, right? On the bearish quasi, so supply zones that we're getting interaction with. This is the task. You can see the big sell candle. That was the first reaction. The second reaction left a pin bar and created a bearish order block, which is being retested right now, and it is still fresh. So that's something we want to be looking at. Is the market going to be reversing from this level and going much lower? Yes or no? We will, get the information in the next coming days and weeks, perhaps. But that's a very possible opportunity, possible probability. And there's something else I haven't spoken of. If you look at the monthly, you don't see anywhere here any level of demand zone where price could be stopping. But if you go on the yearly, you can see that we left a bullish order block on the yearly. So that would be something, a little food for thought for perhaps where price could be heading. If we get a push from these levels, we could be going into the these levels, which are great targets to be having. Okay, so that's the monthly. We go to the lower time frames. Despite the fact that the monthly is, has opened the door for possible lower prices, because of the everything that I just spoke about, the the quasis and the entry order blocks that are being retested and interacted with. Fact is that we have not broken the weekly structural level yet. So the weekly isn't exactly ready for that move, that possible move we might see in the future. Not yet, right? One of the first levels. Actually, I didn't say this, but as we are testing this weekly order block, you would want to be looking for reasons on the next time frame. On that would be the weekly, to look for that short, to build your short case. And if you go there, you would see that we do not have that case yet. There was I did mark a bearish order block here before, but on deeper checking, that's not a valid area to me. I checked multiple price feeds and it's not visible on all price feeds. It's just on one, the one that I checked initially. But actually, it's the proper way for me to assess that is to accept that there is no bearish order block. So what we are left with on the weekly time frame is one bullish order block that is looking quite weak, right? Look at that wick that was squeezing it yesterday. That is. So to me, what's important for price is what this line, what price does to this line for this week, right? Because if it closes below this or next few weeks, then there isn't anything left to the left for market to hold on to. It likely is going to drift lower. So I'm going to be looking for price action around this level, and the level, to be precise, is 1.17024. That's the level to be looking for on at the end of each week, and during the week as well. You can trade it, because anytime the market is above it, will be seen as a strong signal, or as a signal of strength, and every time the market breaks through it, will be seen as a sign of weakness. And you can actually go to the lower time frames and see how the market reacts to that line. Right, that's the line. That's the same line. Actually, it's not the same line. Let me double check. Let's mark this line differently so we can see it on the lower time frames as well. All right, so now it went away, but it's there. That's the line. There you go. That's the line. All right, so if you go to the hourlies, you can see how the market reacts to that line. It's this line, the orange line, right? It's currently not really reacting too much, I must say. Right, went through it, and again with no reaction, and now there is a little reaction here. We'll see if it's a higher time frame, so it's not going to react all the time on it, but you could catch price reacting on it when you have alignment, let's say on the H4, H1, and it is around that level. That could be a sign that now is the moment that the market will be reacting on that weekly weekly lower border of that order block, because that's what it is. It's a weekly order block being retested and pushed. All right, so the weekly. Let's go back to the weekly. So we have this area, and everything will depend if the market is going to respect or violate it. By the looks of this wick, it looks like the market is quite weak and likely to break it, right? But that's just now, and we still have 3 days left for this week. Not only that, but we have things are normalizing again on the non NFP situation. Before, because of the shutdown of the U.S. government, we didn't have NFP, at least not on. We skipped, and we had delayed numbers coming out. But this week, according to the calendar, we have NFP coming out on Friday. We have ADP coming out tomorrow, and this will most likely is what the market is waiting for to give us the indication whether or not that weekly order block is going to be respected or not, right? So we still have a lot of big news coming out, or numbers coming out, that will decide whether or not what the market will do. So we'll have to be patient on that. But this week could be already we could get clarity on this topic, or on this question. So the weekly order block, that's the only thing that I'm looking for on this time frame. And the daily, we do have a reversal pattern that left two daily order blocks, which are way below. And frankly, from the daily time frame, it looks like the market really wants to go to these levels, at least to these levels, if not much lower. So I'm actually bearish on EU, not only for the bearish daily quasi that has been used. What bearish quasi you're talking about? This bearish quasi right here. That's the head, left shoulder, neckline. It breaks it, and it goes back to the order block, and has the first reaction that didn't have follow through, came back, and now we are pushing through and pushing down, or market is pushing down, and took out already the swing low. I mean, maybe let me mark it that the second time around it went lower yesterday, and that's a sign it's breaking that swing low. Maybe there's a little push, but likely we're going to be directing our price is going to be moving towards the levels below. Of course, we need to wait for the numbers this week before we get clarity if this is how the market is, positioned. Whether or not it changes completely with the numbers, we'll have to see. But currently, it looks quite weak, and I think the path of least resistance is price moving from these current areas, and actually moving from the daily entry order block on the quasi, and then going to that uh, reversal or buy quasi entry order block on the quasi. So you have a quasi on both sides. I know it sounds a little bit weird, but it's it is what it is. It's how the market works, by creating on each side reversal patterns that it will then come in the future and retest them before it continues onwards. Very very current, very recurrent pattern. So I'm looking for a sell. I'm bearish, I mean, on EU, and I'm waiting for price to reach these levels before I'm interested in possibly going long if we get an alignment. But let's zoom in. All right, so currently the market is retesting this order block, which is within the weekly. I don't see that as a good reason to go long, because as you can see, the 50% retracement is below the level, right? From the low to the top after the low. That is, that this would be the head on the lower time frames, on the H4, H1, etc. This would be the head, and this will be the top of the reversal pattern. And everything, even if it had some entry order blocks, would be below the daily order block, meaning there will be in weakness territory, and you don't want that to happen. You want the entries to happen within the area, the relevant area. Actually, it's this area, and not below it, right? So that to me tells me that the probabilities of market continuing to lower and actually break this swing low are actually bigger than 50%. I think it's likely that to happen. I don't know what's going to happen, but probability wise, I think that probability is higher than not, higher than 50%. All right, so that's the daily. I don't have a structure here yet. This is what is it? The 4, 6, 8, the 8 candle, but actually it reached it before. In theory, you could still use that level for a long trade, but only for the very next level long, based on this order block, but not as part of the quasi, right? Not part of this. I wouldn't expect, at least not with current price action. However, you can still trade. If you get a H4 order block, still trade it perhaps to this level or perhaps to that level. That's still within reasonable, or within reason to be expected based on what we are seeing here. Maybe that can change, right? You always have to be flexible on what to expect from the market, because the market, half a day could be all it needs to change things completely, form new structures and break bearish ones, form bullish ones, and next day it's retesting them, and before you know it, it's shooting for the stars. But so far, we're seeing weakness. Even though this pin bar looks very bullish, and that's the reason why you shouldn't take candlestick combinations or TA in isolation. You should use it within the context, and within the context that this bullish order, this pin bar happened, is by where the market squeezed by a lot the demand zones, the weekly and the daily. It's supposed to be reacting from, meaning that which should be the cause and the fuel for price to be reversing was not very effective. It ended up being a pin bar, but the way it did it is actually kind of bearish, right? So a bullish candlestick can actually be a bearish sign. It sounds weird, but when you put it into context, you can understand that it's not supposed to have happened this way. So that's the daily. Let's go to the H4. We do have a quasi. Do we have a quasi? We don't. There is no quasi here on the H4. Let me double check the entry. The quasi neckline is here. We never reached that, at least not yet. We do have a order block here below, but as I said, you should only trade it based on that time frame. So with H4 going to the next H1 and then get out, because the overall picture on the daily doesn't look too bullish to me. We do have a structure that is in alignment with the daily bearishness, which is this fresh order block, and that this is the trade that I didn't take this morning for the reasons that I wasn't available to be trading. So we had a fresh order block here on H4, and if you look on the lower time frame within that area, I actually marked this before. Within that area, we had a fresh bearish as well, right? So this is the open. Look at that; it's 29, and the close is actually that's that's the overlap of the H1. I think I saw it on a different one. Okay, so it must be a different price feed, but still, there was an overlap here on that created price came back on the, I think it was on the 2 minutes, and gave us a very nice entry right there. Let's take a look. That's the 1 hour order block that was created, and price. It was after. Let's mark it the time so you have an idea. After it was the 9 o'clock candle on this GMT plus 1. So when you were on the 5 minute, you should look only for price action after 9 o'clock, right? So this would be the 9 o'clock mark, and that gives us this entry to this order block to be reacted on, and it was on the 2 minutes, and it's also visible on the 3. But the 2 minute is the valid entry that I saw. Didn't take it. I was asleep. But that would be the trade that I normally take during London session. You have a H4 order block on H1 that is overlapping it. The lower time frames, they indicate a quasi possible reversal in the direction of the hourlies, and this is the quasi left shoulder head neckline. It comes back to one of the 2 entry order blocks. You get in. I put my stop here, but you can put it above. You can put it tighter. You have to find out for yourself where it makes sense to you and your stats, and then you get, whenever you get your trade, your trigger, you go you take the trade. And only if you get the trigger, right? You can put the stop above here. You can put them a little bit tighter. That's up to you. That's, I didn't take the trade, so that isn't the entry, my entry or my stop, but that would be the way that I would approach this. And get in and putting your targets. The first target that makes sense is the bottom of the structure, which is this level. That's the first one, but actually in reality, you would want to be, since you're trading from an H4 and H1, you would want to target a H1, at least an H1 order block, which would be this one. But as you can see, that entry order block, or that order block to be used as a target, has already been retested, and we know that the likelihood of it holding on the second time is a little bit lower, so it makes sense to target something lower, maybe the 50% retracement on the move, maybe something lower. I would start on these structures are gone, by the way. I will start looking for the H4 order block until the market starts doing exactly this, right? And it creates an order block and comes back and retests it successfully. If that could be a sign, if you're actively trading, managing your trades, to start looking for an exit, right? So you have the H4, H1 order block being created right here in these 2 candles. Candle number 1, number 2 that created the order block. Price comes back to retest it, and it should not be moving away, because that's No, it should be failing, and it's not failing. That's a reason for me to, if I were actively trading my trade, which not even in the trade, that would be a reason for me to. You still have 6 minutes for it to to assess the trade or the price action, wait for the close. But I would be going for looking. I would be looking in on the lower time frame to see if there's more signs of price wanting to reverse. This is the 5 minute quasi, and there is a beautiful reaction off of this entry order block on the H1, right? See that? It makes sense in my mind that the market could be reversing from here, and it's actually doing it. I want to be seeing. I don't want to be seeing the market reacting with a quasi against my position. That's not a good thing, and for sure, if the market takes out this high, right? If it takes out and prices, uh, if it fails to take that high and then comes down, that's fine. I can live with that, and that means that the likelihood that perhaps the reversal has no longer the power to move, to reverse, has lost momentum, so to speak, is the probabilities are quite higher than if it doesn't reach it. But if it reaches it, this could be perfectly fine. But if it starts reaching and breaking this level, right? So if it gets above it and holds it, that's a sign I want to be out of this trade, right? If you're seeing this, then I want to be out of the trade. I know it's a horrible, not a horrible, but it's much. When you're actively managing your in order, that's the price you pay in order to incorporate new data. I don't uh, actively manage my trade that much. There are moments where I do that because it comes with a price, right? In order for you to read market, you need the price needs some space to create new patterns, and that's profits you're basically giving away. So it comes with at a price, but you can compare that to the target. You can compare that to the risk you're taking, and to the R multiple to see what still makes sense. The same way you do with risk reward ratios. There are times where there is a setup. It looks great, but the risk reward ratio isn't there. It's not optimal. It's actually not great, and you should have your cutoff points for yourself up to risk reward ratio. You're still going to be taking the trade, and it shouldn't be based on preference. It should be based just on metrics, just measuring expectancy of each different scenario and looking for what is the where is it still solidly profitable. And when it gets uh, sometimes profitable, sometimes not, that's the time you shouldn't be. That's when you should be considering the cutoff value of your risk reward ratio. The same thing as with managing your trades, right? What time frame will you be managing? Will you be managing on the 5 minute, on the 1 minute? This could be a reason already for you to take the trade off, right? The reaction we had on that order block. Well, sometimes you will give it will get you false signals, meaning you will have a reaction on this order block, but the market will still continue later on, and that's fine. I mean, not every quasi will predict. On a quasi on the 5 minute is not a huge predictor on for a longer period of time. Although here you have a bullish H1 order block, so it's not only a 5 minute quasi, but you can understand that that's not the only thing that will. It's not going to be like a guarantee that the market's going to reverse. That's just a probability. The fact that it is reacting does increase the probability of a reversal, and you don't want that against your trade. All right, let's check the chat. How are we doing with the likes? 183. Is that correct? That was a couple of minutes ago. I think we have done better, have we? Let me check here. We have. How are we doing on the likes? I'm checking here. 207. Is that true? Did we pass the 200 mark? Yes, we did. 207. Congratulations, everyone. I knew it. I knew you guys were capable and able to reach that level. 207. That's beautiful. Awesome. That's great to check back. All right. So 26 minutes. That's where I was on the chat. Um, no problem. Thank you for that, Ambient Light. Thank you for your kind words. Uh, we do appreciate it, you being here with us, and appreciating the effort. The team puts a lot of effort to making a stream every day where value is shared with traders, those who are listening actively to our streams, and come regularly to our sessions. Understand, we they know they see the effort we put in, and they know what we're talking about. And you mentioning it's nice to see that feedback. Trading with on it with Ronit. Okay, trading with Ronit. Sir, my account got disabled last week. Please be aware that I'm not from the support department, so I will not be able to look into your account and see your issue and help you in any way. I'm hired as a trader to show um, setups and opportunities, and to guide you as much as I can based on the experience and so on. But support issues are I can help you with. Trading with Ron goes on saying Bitcoin issue, it's still not activated. What do I do? I have seen these messages where there was apparently something happened with Bitcoin. I am not I don't have the details, so I'm not able to give any details because I don't know. But I've heard this. There was an issue with Bitcoin. What I would do is I would get back to the live agent on the website. Give them a few days, because if depending on how many traders were affected, it will take some time for them to resolve this. But I have all the confidence that they will resolve this in a fair manner. But they will need to do things carefully and give you the deserved attention. They it takes some time to resolve some issue times, right? And what I would do is I will get back to them, give them a couple of days time to resolve, go back to our agents, ask for updates, and keep make sure that you're on top of things. Get back at them every so often. I'm sure they will try their best to do it in the shortest period possible. And come back to the stream, come back to the friend, and let us know how the Fifers resolve this issue. I have complete confidence that you will come back trading with Ronit, and tell us that it took maybe a little longer than you expected, but you were treated, and the issue was resolved with fairness, because that's what we stand for. And I have complete confidence. Otherwise, I would not be part of of any streams if that wasn't the case. I have complete confidence that our team will do their best to treat you as fair as possible. That's why we're in business for this is our 10th year in business. We're, as a prop firm, we are one of the pioneers in this industry. Not for that's not doesn't come, uh, you know, by chance. It's by treating our traders fairly and being transparent about our processes, and by building a community and building it with you. And that's why we have these streams as well. So awesome trading with Ronit. Come back and let me know. Unfortunately, I myself cannot help, but come back and let us know how this trade or this issue was dealt with. All right, so that's it on my side. I would like to thank you all for your attention and invite you to our Discord session that we have on every weekday here at the server of the Fivers on Discord after these YouTube sessions where we get together, we sit, around a virtual bonfire and talk with each other, interact with each other with charts, with setups, with ideas, and have a great time. So, people from viewers from YouTube, thank you for watching. I appreciate your attention, and I hope to see you again tomorrow for another session with the live streaming, live trading room from of the Fiverr. So see you, and until then, be safe. Bye bye.